Pal to address the gathering for IFA's traditional annual budget discussion.
Thank you, Ishita. Very good evening to everyone. Greetings from Sushil Agrawal and IFA India NRC. IFA is pleased to host today's webinar named Fireside Discussion on the Union Budget 2022-23. Well, there are a very limited number of changes which are being proposed through this budget. However, some of these changes shall have a very far-reaching impact and may alter the very understanding and perception towards some of the provisions of some sections. Taxation of virtual digital asset opens a plethora of transactions that would be treated as income without being classifiable under any defined head of income. And then provisions related to updated returns, which is 139(8)(a), with additional tax, and they change the very concept of limitation of filing of returns. Reassessment regime, although it was restructured very recently, has also undergone some changes which need discussion. And then section 14A disallows some new dimensions have been added. The regulatory tedious provisions relating to perquisites of business and profession, it's altogether a new concept, and it will open a new battle for taxation of perquisites in kind. A lot of litigation is likely to be there in due course, and auditors, as usual, would have a tougher time by the end of the day. Similarly, provisions related to TDS on stamp value of immovable property, they are not free from certain doubts. We all must have gone through the amendments introduced through this budget in since yesterday. But IFA offers not the informative clarity on the proposals, but a deep discussion amongst the best brains of the country. We bring forth some distinct points of views, and this is also a precise reason why we are not covering the entire budget today. We'll only cover some important topics during the discussion. We have a very fiery panel today consisting of IFA India Chair, Mr. Mukesh Bhutani, Mr. Kamlesh Vashne, Joint Secretary, TPL1, Senior Advocate and past IFA Chair, Mr. Ajay Vora, Mrs. Renu Narvekar, Vice President, Global Taxation, Tata Consultancy Services, Mr. Ramesh Khaitan, Senior Vice President and Direct Tax Head, Lupin Limited. And the program is being moderated by none other than Mr. Arun Anand Giri from Tax Sutra. On behalf of IFA, I welcome all panelists and participants to this wonderful treat. Before I hand over back to Ishita for further proceedings, let me briefly introduce IFA to you as an audience, as our audience today includes certain non-members as well. International Fiscal Association, also called as IFA, is a leading international NGO on tax matters. Established in 1938, IFA is a neutral and independent platform discussing international tax issues. World over, its members comprise corporates, tax professionals, government officials, jurists, academicians. Headquartered in Netherlands, it has over 12,000 members worldwide. And IFA India branch, it was set up in 1983, and it has more than 400 elite members and expanding. So thank you everyone for joining, and let me hand over back to Ishita for further proceedings. Thank you.
Thank you, sir. Thank you so much. Congratulations on becoming the chairman of the IFA NRC for this coming session. Now, I would ask my co-secretary, Mr. Shashwat Bajpai, to introduce the panel.
Good evening, everyone. Today we have a stellar panel to have a threadbare analysis of the budget 2022-23. Without much further ado, let me start by introducing Mr. Kamlesh Vashne. Kamlesh Vashne is a 1990 batch of IRS officers He is an MBA from IIM Lucknow, has also taught there to 4 batches. He's also worked in the tax administration of the PNG for 5 years. He was the first APA commissioner and has played an important role in rolling out the APA regime in India. He has expertise in tax policy and international taxation and is currently the Joint Secretary in Tax Policy in the Department of Revenue. Of course, he's a regular speaker in various conferences and in various institutes. We welcome you, sir. We also have with us today Mr. Ajay Vora, Senior Advocate. Ajay sir is a qualified chartered accountant and lawyer and has been practicing since last 36 years in the area of domestic and international tax and is the leading arguing counsel tax before the tax tribunals, high courts and the Supreme Court. He has argued several cases involving complex issues having wide ramifications and has contributed immensely to the tax jurisprudence of the country. He has been the past chairman of IFA India branch and the past chairman of the Direct Tax Committee of the PST Chamber of Commerce and Industry. We welcome you, sir.
Thank you.
We also have with us today Mr. Mukesh Bhutani, founder and managing partner of the BMR Legal Advocates, with specialization in domestic, corporate, international tax and transfer pricing. He has over 3 decades of experience in advising multinationals and Indian conglomerates on a wide range of matters relating to FDI policy, business reorganizations, cross-border tax structuring, tax controversy, and regulatory policy. Sir is also a qualified chartered accountant and holds a bachelor's degree in commerce and law and practices as an advocate before the tribunals, High Court, and the Supreme Court of India. He has been consistently ranked as a leading individual by the Legal 500, an elite practitioner by the Asia Law Profiles, and thought leader by Who's Who Legal. We welcome you, Bhutani, sir. Today, we're also being joined in the industry by Mr. Ramesh Khaitan, who is the Senior Vice President, Direct Tax Head at Lupin Limited. He's on the Direct Tax Committee of Indian Merchant Chamber of Commerce, Mumbai, Taxation Committee of FICCI on Pharma and Life Sciences, as well as the Taxation Committee of CII and IFA India. He is the winner of the prestigious International Tax Review, Asia Pacific In-House Transfer Pricing, and the Transfer Pricing Team of the Year Awards 2021. We welcome you, sir. Last but certainly not the least, we also have Ms. Renu Narvekar. Renu is currently the Vice President of the Global Taxation with the Tata Consultancy Service, TCS, since August 2015. Renu has extensive experience on tax and regulatory matters over the last 25 years. She was Senior VP and Head of Tax HSBC India before moving to London in 2011. Renu has also had the additional responsibility as the Global Lead for Transfer Pricing and HSBC. She has also handled responsibilities for the Singapore GST and also has been involved in policy discussions regarding GST in India. Of course, let's not forget we have also with us with Mr. Arun Giri, moderating this session as he has been doing ably for so many past years. Arun Giri is the Tax Sutra editor and has had 7 years of experience in business journalism. Prior to co-founding Tax Sutra, Arun was an associate editor with Bloomberg UTV, where he covered financial news with a special focus on tax. Prior to Bloomberg, he was a financial reporter with CNBC. A very warm welcome to Mr. Giri and all the panelists. Looking forward to a fantastic and engrossing session. I hand it over to Mr. Giri to take the session forward. Over to you, Arun. Thank you.
Thanks so much, Shashwat, Ishita, Sushilji. What a pleasure it is to be moderating this webinar. It used to be the physical conferences for so many years. And I can't forget those chilly mornings. Then it became cold evenings with all our fellow panelists, especially Kamlesh ji, Ajay ji, Mukesh bhai. So we miss those Delhi chat sitting here in Mumbai. But it's quite a warm evening here in Mumbai, central Mumbai, Lower Parel skyline right behind me. And I must say that as far as the weather is concerned, we are in better hands right now. Mumbai is treating us quite well. A warm good evening to all our panelists. It's an ensemble panel. The only thing I have to do is to keep time. So I'll do that diligently, I promise, for the next 2 hours and 15 minutes or so. Lot of questions, lot of themes to be covered. Virtual digital assets, new updated return, a plethora of amendments, both substantive as well as procedural. So we will hit the ground running quickly. To set the context, robust tax collections coming off a brutal second wave, a receding third wave. Look at where we were 2 years back. exactly 2 years back, sometime in March, second week, 2020, the first wave or the pandemic, it was the first phase of the pandemic. And a lot of people, including me, thought that the tax collections are going to go for a toss for the next couple of years, that we may as well be in a depression, that the economy may degrow 20%. And lo behold, what we have 2 years later is exactly contrarian. The economic activity is picking up. A stock market has doubled from the lows of the pandemic, from 28,000 to 60,000, which would not have missed the legislators or Kamlesh ji's eyes. And you have, for the first time in a few years, the actual collections, the revised estimates of tax collections, the income tax collections, being projected to be 15 to 18% more than the budget estimates. 12.5 crore, the revised estimates, 12.5 lakh crore versus 11 lakh crore or so, which was the budget estimate for the current financial year. That's stunning. If you look at beating projections by a mile, this is quite a stunning year as far as tax collections go. Of course, a big hand to the tax administration as well. They would claim that over the last 4 to 5 years, whatever measures they've put in place is finally paying dividends. We've had a lot of big bang budgets. In 2004, Shashwat mentioned I had 7 years experience in business journalism. Yeah, those were the first 7 years of journalism for me. After that, it's been 10 years here. You had a budget with fringe benefit tax, which attracted a lot of attention. In between, you had the direct tax code, you had GAR, you had the retrospective amendment budget of 2012. Exactly 10 years back, the Vodafone Supreme Court judgment was delivered. And a month later, we had a union budget with retrospective amendments. Then you again had a DTC2, DTC3, quite a bit of that got incorporated here. Then you had NDA2, which came in 2-3 years back. And if you look at the theme of the last 5 years, it's been big bang tax reforms, be it faceless assessment, faceless tribunals, a lot of impetus on the black money side, tax avoidance side, and so on and so forth. So it's been a government that has not been afraid to make changes, that has not been afraid to go the reforms way. And to highlight one theme, when Finance Minister Mrs. Nirmala Sitharaman started her speech, Part B, this was the first sentence: more reforms that will establish a trustworthy regime. This was the underlying theme for the direct taxes part of her speech. So let's hit the ground running. My first question, of course, goes to IFA India Chairman and one of the most renowned tax experts, Mukesh Bhai. From a policy point of view, and a quick initial reaction from all our panelists, from a policy point of view, do you think this budget on the tax side hits all the right buttons for you?
Well, yes, I think in my view, two of the most reformative measures have been on the faceless assessment and the reopening. Mr. Varshney will bear me out that when the committee for drafting the new tax code was mandated to look into which are the provisions in the income tax code which causes maximum amount of dispute, I think reopening was one of them. They identified that, took the bull by the horn, and carried out reformative changes. We will get into the detailed discussion. I don't want to steal the thrill because I want to first listen to Mr. Varshney, because he has been the chief architect insofar as the nuances of the income tax law is concerned and the amendments that have been effectuated in this year's budget. On faceless, I think it was heartening to note that some of the recommendations that came by way of the writs issued by the High Court were taken into consideration. For example, the right to be heard personally. Also hidden and not spoken about in the last 2 to 3 days was this provision for carrying out a best judgment assessment under the faceless scheme. The powers there also have been curtailed now in the amendment. So the overall messaging is that it's been reformative. I'm not going to go into the broader issues of tax policies, tax incentives, because to a larger extent, that debate has been buried. I think the larger challenge for our tax code lies with the manner in which it is administered, and hence consecutive budgets have delivered amendments to be able to address that. We will look into some of the issues, as I was mentioning before we all went live, that there are some recommendations that we wanted to make, and I wanted to make use of this IFA platform as well for recommendations, because stakeholder consultations at the business chambers of commerce are very, very macro. It's a 10,000 feet view where large business houses, leaders want to become and seen on the television, but the real work happens at the level of the joint secretaries and the officials who have been mandated the task of carrying out the budgetary provisions. And I certainly, for one, wanted that we make use of this opportunity to hear him out. So when we all got together, we felt that industry representation is important. Experts would come in as well. But I think the most important is that of Mr. Varshney. So I'd just like to stop over here and hand it over to you, Arun.
A lot of action on the litigation management side, but irrespective of what is done, the number of people who come to you for opinions, the number of cases you argue just doesn't come down. So Ajay, your first comments on the litigation side.
I think, Arun, you must keep in mind that tax is actually a complex subject. You have section 115, JA, JB, JC, AA, AB, BB, CC, and so on. And believe me, when you get into litigation, most judges tend to keep aside tax matters. Not many are willing and volunteering to actually settle tax disputes, because everyone feels that tax is a complex and an intricate subject. I, for one, yesterday was admitting that I may find it difficult to file my own return. I really wouldn't know how to actually get down to filling your own return. And the complexities are increasing by the day. While working from home, I have, written several opinions on very complex, intricate, and interesting concepts. And there are disputes which are agitating minds, and there are questions that are arising, and which will come for adjudication in the succeeding years. But I must say, as Mukesh said, the government has been progressive in the sense they have taken recognition of, disputes that have arisen. They have tried to set right, issues that can be addressed at their level, those which are not sub judice before the courts. And I'm sure we would all want to, give our round of applause to Kamlesh ji for steering this in the right direction. But sir, before I hand it back to Arun, I have one question, and I see a disturbing trend. In the last year, as also in this year, the budget proposals are made applicable for the current year. I think historically, the budgets were always applicable from the 1st of April in the succeeding year. So that means it would be applicable for an assessment year which is yet to commence, or the financial year which would commence from 1st of April. Last year, I saw the budget proposals were applicable for the previous year, which is currently running. This year as well, leave aside a few amendments which are made applicable from 1st April 21 or from 1st April 23. Most amendments are applicable to the current year, which is ongoing. So in a sense, the budget is bringing in retrospective proposals. So please correct me if my understanding is not correct. So I see this as a disturbing trend that for the year that is going on for, almost 9 months or 10 months of the year are already over. And we have now a proposal which affects the transactions taken place during the current financial year.
Perfect. Ajay ji, apart from that, any couple of amendments which caught your eyes on substantive ones or procedural ones, whichever ones, a couple of amendments which you would like to elaborate later?
No, we will deal with some of them. I think they are in the right direction. 14A, for instance, is something that we will need to debate. Okay. Section 37 is another one. Okay. And there is tightening of the tax regime. There are amendments relating to rationalization of provisions for deduction of tax at source. But the challenge there is you are actually loading the taxpayer with a lot of obligation. The payer of the income is being made to suffer this burden of tax compliance on behalf of the government. I would say that the tax deductor is actually acting as an agent of the government in discharging the responsibility of complying with the provisions of law. So those responsibilities and the burden is pretty onerous, and you are saddled with penal consequences for the failure to withhold tax.
Forgive me
I
for
think,
this
I think
joke.
that's an issue that needs to be discussed. Yes.
Ajay ji, forgive me for this comment in lighter vein. I think the tax deductor is an agent who is seen by the government as a double agent. Renu and then Rameshji. Renu, from a corporate tax point of view, you represent one of the largest Indian IT companies, the largest Indian IT company. Anything that kept you awake for a couple of nights, provisions which you felt could have an impact more than what you thought on the budget day?
So not really, Arun. I think it's been, I mean, what's been really heartening to know is the government's, overarching focus on digital and technology, which obviously is very good for the business. And I think from my perspective, I think we all expected a big booster budget. I think the FM, however, she's chosen the path of continuity by actually continuing to focus on the stimulus announcements that were made in last year's budget, and also those that she separately announced, after the onset of wave 1 and wave 2 of COVID. And I think the biggest refreshing change from a tax person is that, it was a very short and simple budget, and it had no complicated jargons and tax amendments. Yes, there have been some disappointments in terms of some provisions which were made retrospective, which is, going against the government's commitment that nothing will be done retrospective. So I think, and the changes that have come in the faceless assessment or the reassessment provisions, or like, Ajay Vora was talking about the onerous TDS obligations. So yes, but that's part of life is how I take it. But I think overall, it has been a good budget.
Wonderful. Rameshji?
I would say this is a very good budget, and it is focusing more on tax evasion measures through the taxpayer of the income rather than the recipient of the income. One is that 194R. Now it has cast onerous burden on the taxpayer, and even the section itself says that it has to ensure that the taxpayer has to ensure that the tax is paid by the recipient of the income. And second thing, 194R doesn't talk about the applicability. The memorandum says 1 July 2022, but the act doesn't say, the amendment section 194R does not say. So whether it is retroactive or it is prospective, that is from 1 July 2022. Second is that tax litigation measure like the 139(8)(a), which has been introduced. Now 2 years for March 21, the return filing of return expiry date is 31st March 2022. And by that date, the budget will not be passed. So the person cannot revise the return for March 21, March 20. So this is one. And one thing that everybody has been asking for. So to make India net foreign exchange earner, like pharmaceuticals are making huge exports and earning foreign exchange for India. That is mostly primarily on account of our research work done by nothing has been come on R&D deduction.
Sure, perfect. So yeah, for pharma companies, R&D is a big thing. Kamleshji, the man himself who's written quite a few budgets on the income tax side, one of the key people in drafting the tax proposals, one of the most sporting individuals when it comes to asking questions. Rarely do you see him get agitated, but when he does, then he can really unleash his fury with his words, with the verbal fury, I would say. Kamleshji, we want to hear from you. Was there any last year would have been a tough budget? We came off the first wave of the pandemic. The second wave was not yet there. One wasn't still sure how the economic activity would pan out in the next 12 months. We had the taxation laws amendment ordinance. We had, a big bang announcements on corporate tax cuts before that 6 months back. So you had some mini budgets in between. Then a few months back again, we undid the retro amendment. But in terms of the runway, you seem to have a much clearer runway this time than you did 12 months back. You would agree with that, Kamlesh, that this was an easier budget to write than last year?
Yeah,
On the
from the perspective that you had a clear runway, it was definitely a better position of the economy that we were in this year as compared to last year. But there were other constraints which were not there, because last year what happened, the second wave in Delhi, at least I'm talking about Delhi, got over in the month of, you can say, end of November or mid-December. And after that, as our experience is, that once COVID wave is over, for a few months, everybody is safe, So that problem was not there. This time, unfortunately, the third wave came in the month of January. So that was a big challenge for all of us, including, and COVID virus does not distinguish who is working in budget and who is not working on budget. So that's a problem. In addition, there were some other issues which created big challenges. Those are personal issues. So it was probably for me, the direction was clear, and the methodology that we adopted for this year budget was even better. A lot of discussion which took place, everything happened, but the month of January somehow turned out to be a very challenging month. Although the good part was that because we started early and we had a lot of discussion in the month of November and December, so we were able to, those challenges of January did not affect us.
Perfect. Kamlesh ji, any running theme? 2 years back, we thought that the government is out with a big axe, and go after, and it's going after the super rich and just milking them. Then a couple of years back, you had a lot of amendments targeting tax evasion, a lot of emphasis on black money, and so on and so forth. So then you had one of the years where a lot of the direct tax code suggestions made way into the budget, especially on the administrative side and so on. This time, you have 84 amendments, less than 100. Any running theme, Kamlesh ji, among those 84, or maybe even the substantive ones? What was the running theme?
See, let's try to understand when, it started from last year, when every country was facing a problem for revenue collection, and they needed money to be spent on COVID management, on hospital, and all other, test and research, everything. It was real challenge for every government, and therefore most of the government did consider increasing tax rate or bringing some new tax. We have seen even OECD recommended inheritance tax and all that, or maybe something like wealth tax. All those things are there, but India decided that we are not, last year, that we are not going to impose any new tax, and even existing tax rate would be stable. And that theme has continued this year. Now, so that we give a very stable and predictable tax regime. That is the foundation on which this finance bill has been built. Now, of course, government would still need money. You don't raise tax or you don't impose new tax, but you still need money. So that money is through efficient tax administration. And for that, administrative reforms have taken place. Arun mentioned in the beginning that last few years there have been administrative reforms, and plus legislative intervention have been there in last few years, plus this year. So the idea was that how can we have voluntary tax compliance improved in this country, and and less litigation. So some of the provisions that have been introduced, they are in that direction. Updated return is from that perspective. So when we talk about updated return, the process that we have followed, initially we used to get information, voluminous information from various sources. We used to keep that in our pocket. And then we used to issue notice to the taxpayer that you come out with a return, and then we will tell you why did we issue the notice. So 148 has been issued. So that, the fight has started. People, go to it in the court, and even those who do not go to it, there is assessment, and then there is appeal. So the process of dispute has used to start in every case. Now, we changed that process. Then we said that we are going to populate all the information to your e-filing account so that when you file your tax return, you know what is your interest income, what is your dividend income, what is your capital gain. So taxpayer knows it. Now, then all information is not populated. There is still some information that we collect, and then we analyze with the return of the taxpayer. And for that, we have come out with e-verification scheme, which is precursor to 148. So that means before we issue 148, there would be e-verification. That means the taxpayer would be confronted with the information, and taxpayer might explain it that it is perfectly fine. My tax return has accounted that particular transaction. So some cases would get dropped because of that. And in some cases, there is possibility that taxpayer would realize that he has not accounted for that particular transaction. So what will happen? Should we issue him 148 or should we give him another chance to update his return? So that is the logic behind this new provision, updated return. Simple voluntary compliance, that if everybody is violating law, you cannot catch everyone. It is impossible for any law enforcement agency. Make 95, 97% to voluntarily comply the law. You have administrative mechanism, you have legislative intervention, so that 97, 98% are complying the law on their own. And then you go after those 2-3%. And don't relent when you go after those 2-3%. That is how tax administration will work.
Kamlesh, was it your brainchild to write such a long memorandum, explanatory memorandum for all these provisions?
No, it's always a teamwork. It's always a teamwork. But yes, we did borrow.
You made us work harder. Kamlesh, I can't let you off like this. Give me two amendments which are the closest to your heart in this budget. Two amendments which are closest to your heart.
No, very difficult. This is so many amendments which are closer to the heart. Very difficult to say. But yes, updated return is definitely one of them. And surely, I mean, that has been discussed over the years. So it's nothing that it's a new idea, but new idea has been implemented. So, that is something, there may be people will discuss in this, conference that how it can be improved, or maybe based on experience, it will be improved further. But a step has been taken in the right direction. And if idea is that we have less 148 to be issued and more people on their own updating their tax return, and if we can achieve that objective, I think that will be a great boon to the government of India, to the taxpayer of India, and to the income tax department.
Wonderful, Kamlesh. The catchwords: voluntary compliance, encouraging voluntary compliance. We will now start with the first theme and the big theme. And let me take Mukesh Bhai's concurrence before opening this. Mukesh Bhai, we start with virtual digital assets. So we are essentially, we are starting with the most exciting, interesting part. We are not leaving it for the last, like we many a times do, that we reserve the best topics for the last. So we are taking the best first. Is that fine with you?
Absolutely. Please go.
Yeah, so come. So Mukesh Bhai, we'll go
one intervention.
Sure.
Sorry, you asked, two, so I spoke only one. Now, the jury is still out on the second one. I don't know. And that initiative is actually not my initiative. That was an initiative of one of my director, Vipul Agarwal. So that is trust, So when he was coming out with a proposal, I was telling him, you are making it so complicated. Like, this when you posted this question to Ajay ji, so he said that income tax department, so many explanations, so many. So 1023C now has, 1023C itself is one of the 50 clauses in section 10. And in that clause, there are 24 proviso. And those proviso also has explanation, and those explanation also have further proviso. So, so I was telling you, making it more complicated, but then we can't help it because it is a proviso. It is not subsection. If it was subsection, we could have had more subsections. But I think he has done a wonderful job because there were a lot of disharmony between 1023C and 11, and assessing officer didn't know what should happen when there is a violation of any provision. Taxpayer didn't know. We have so many conditions that you should do this, you should do that, you should do that. But what if I don't do this? What should happen? The clarity has come out. Now, of course, a lot of provisos have been inserted, but that is how the Income Tax Act is. Unless you come out with a new act, you cannot get over that problem. but a very good attempt has been made by him, so that the trust taxation regime is completely overhauled. So I think the second point, I will say that trust and institution regime.
Perfect. If Mukesh Bhai were advising a few more charitable trusts, I would have prevailed upon him. Apart from the blockbuster books that he has lined up for this year, I would have prevailed upon him to write one on charitable trust as well. But we will approach other authors since Mukesh Bhai is already booked. Virtual digital assets. We know that all our panelists, I won't make it. Kamlesh ji will be in trouble, so we'll exclude him. All the other panelists are sitting on several $1 million of Bitcoin gains, and I'm sure that that the virtual digital assets scheme is what has been engaging a lot of our audience as well. Start with that. Mukesh Bhai, should I just go through quickly the definition, and then I'll request Mukesh Bhai to take over this part. Section 247A, a new clause that defines virtual digital asset as any information or code or number or token into bracket not being Indian currency or any foreign currency bracket closed, comma, generated through cryptographic means or otherwise by whatever name called, providing a digital representation of value which is exchanged with or without consideration, with the promise of representation of having inherent value or functions as a store of value or a unit of account, and includes its use in any financial transaction or investment, but not limited to investment schemes, and can be transferred, stored, or traded electronically. If this were there for my CA final exams, I would have scored 5 marks less in income tax, which was in May 2003. Mukesh Bhai, there are a few questions that we have on the VDA part, but I'd request you to please take this up authoritatively, because this is, yeah.
Arun, I read the definition thrice and I heard it from you 4th time. It is complex, and I will just let others decipher it. But I just had one point on the definition, which is a little worrisome, because the definition is very clear. It goes beyond the scope of NFTs and any form of a digital asset to be notified by the government through a notification, but digital representation of value exchange with or without consideration is something that I couldn't follow, except I could imagine certain things in my mind which could have connection with our widely worded equalization levy. And certainly, Mr. Varshney can answer that. This was one part of the definition that worried me. The other thing, I had many questions which to some extent got answered by the CBDT chairperson, for those of you who did not hear his statement, which is that the government has been in its pursuit for collection of data, though there are certain reports that suggest that there are 3 crore crypto users in the country. That would also include my son having borrowed $100 and venturing into crypto. By the way, he's a non-resident, so he's not violated any law. Just so I clarify that. But the 4 categories identified have been people who don't file tax returns, people who file tax returns don't report, people who file tax returns report but don't report it correctly, because obviously there are lots of questions on characterization, which to some extent gets plainly answered in the law by saying no set-off of losses, no carry forward of losses, so on and so forth, no deduction. Essentially, to me, it seems that the larger public policy guidance on taxing crypto is pedestaled on a platform that crypto is still a taboo. And it may be because the perception that the government carries is that crypto could be an avenue for money laundering, crypto could be an avenue of tax evasion, it's difficult to track, so on and so forth. So 30% rate of tax, maximum marginal rate of tax. I felt that there are 7-8 countries that have legislated crypto, and I'm sure Mr. Varshney and his team would have looked at those regulations. But I felt that Canada and Australia, whose tax systems are aligned more to India because of Commonwealth, offered guidance though the Canadian system also carries the same challenges that we face on income on transfer of securities, whether it should be get characterized as business income or it should be characterized as a capital asset. Though the Canadians have gone ahead and actually said that if a person is spending more than half of his time on trades, then it would be a business income. I know that it's not very easy to administer those kinds of regulations, but I felt that a penal interest, a penal tax rate was something which was not encouraging for crypto, which could be a significant avenue to promote greater degree of digitalization and technology innovation that we are talking about. That's just the opening point that I wanted to make, but I'm sure we all have lots of questions.
Yeah, so we'll straight jump into those questions. Ajayji, I'm going to fire them at you today. This is the best time I get. 2 days I get to badger Ajayji. Otherwise, we are all at his mercy. Ajayji, the question that everyone is asking, one, this is a comment that has come from one of the senior tax professionals, Radhakishan Raval. RK asks us, the definition is too wide, raises questions which are probably unwanted. Will shares in Demat account qualify as virtual digital asset? What about vouchers? Will CBDT come out with a negative list? So A, is it wide encompassing? Some of these questions, in fact, I even have a document again by one of the reputed tax professionals saying, due to the wide definition, even credit card, debit card, reward points, airline miles, digital vouchers, in-game currencies could potentially be included within scope of VDA. So, Ajayji, you're going to be writing a lot of opinions. Please do give us a heads up here.
I would think, Arun, that at the moment, we are all shooting in the dark so far as crypto is concerned. There is no precise definition of crypto. And in fact, I think tax administrations world over are still coming to grips with this issue. Now, therefore, the definition has been cast wide, all-encompassing, comprehensive, to cover every possible kind of situation. But I think something that is tangible. Now, when you talk of airline miles, you are probably going to encash the airline miles. I don't think there is something that is transferable outside to a third party, or something that is transferable for consideration. It may be transferable for value. Yes, of course. I don't think the intent is to get to those kind of, you can't call them a virtual digital asset. This is something tangible, something in hand, unlike cryptocurrency, which probably nobody has seen. And we are still coming to, terms with what actually is cryptocurrency. So I would think the government has basically cast the definition wide and comprehensive to cover every possible kind of situation. And I'm sure this must have been borrowed and this must have also been taken note of by tax administrations in other countries as well. So at the moment, the question is that we have a new legislation. This will have to play out its time. And only then will we know whether, this covers the transactions that are actually taking place between parties which are reported, not reported, and things of that kind. Frankly, I have little or no idea about crypto. And I must confess that many people that I have spoken to are not able to shed clear light on what actually is crypto. I have frankly no idea myself. I am just told that you have to mine, you have to sit at a computer desk for hours on end. And if you are lucky, you will probably mine a cryptocurrency. But having said that, as a tax person, as a tax professional, you will have to look at whether this creates an asset. And in terms of this definition, if you have mined a cryptocurrency, or if you own, or if you are trading in cryptocurrency, this is certainly an asset which is subject to taxation, in the sense the transfer produces gains to you or it produces profit to you. But on a lighter vein, Arun, from what it appears to me, there is a conflict between the tax law and what RBI has said, that they really want to ban cryptocurrency. So, Kamleshji, my point to you is, this is almost like taxing the profit that you make from illegal smuggling. If you remember, the Supreme Court in the case of Pyara Singh had said that even if this is, smuggling, you are taxable on the profits and you are allowed deduction. Thereafter, the law was amended to say that with respect to illegal activity, you will not be allowed deduction for any expenditure. So this is probably placed on par when Mukesh said, you are not allowed deduction for any expenditure against the profit. You are not allowed to carry forward or set off any losses. So I think this has at the moment been put on that level on par with gains from illegal activities. So is that a correct comment? Because the RBI is still struggling to come to a conclusion whether this needs to be banned or this.
RBI is not struggling, sir. RBI had come to a conclusion
RBI is clear.
But Supreme Court read it down.
Yeah, Supreme Court
read it down because they felt that on the doctrine of proportionality, if my memory
right, you are right. So that's the point.
But are you of the view that this does not make crypto legal? The FM is very clear that this is not legalizing crypto in any way. Do you agree?
Yes or no? Legalizing. I think that stand has been taken. This is not. But at the same time, if there are gains that are made, even if assuming this is an illegal activity, the gains need to be taxed.
Perfect. Kamlesh ji, the floor is yours. This would not have been an easy definition to author and an easy scheme to spell out. Kamlesh ji, all yours. You've seen the questions.
Yeah,
Ramesh ji, I'll come to you next.
Yeah, I fully agree with Ajay ji. When you have to draft a definition, you probably have to come out with a very wide definition so that nothing is left out. And in doing that, we were fully appreciative of the fact that some of the unintended assets would also get covered. And that is why that provision is there, that power has been given to the central government to exclude any asset from the definition of virtual digital asset. That is the point number one. Point number two is, yes, we have borrowed this definition from the bill which was introduced earlier in the parliament. But we know that, this definition may have to be amended, and we are quite open for suggestion. Whatever suggestions you have on this definition, those suggestions would be considered. And, probably I believe that if you want to really come out with a good definition, idea is to give constructive suggestion that how definition should be covered. Somebody who has knowledge, instead of just saying, like, I think this anonymous attendee was there last year also, and this year too, he has been just shooting off whether this is covered, whether that is covered, whether that is covered, whether that is covered. You suggest what should be the definition, and we will consider it. That is point number two that I wanted to make. And yes, it is like speculative. It has been treated like a speculative transaction. Ajay ji is correct that in a sense, we are not commenting whether it is legal or illegal. Finance Minister has said it, Revenue Secretary has said it, everybody has said it, that Income Tax Act does not distinguish between legal income or illegal income when it comes to taxability. So just because we are taxing it, it does not mean that we have made it legal. But yes, the strict provision that we have brought in under section 115 BBI is basically based on the fact that it is more like a speculative transaction, or it is more like addition under section 68, 69. For that we have a special section like 115 BBG. So basically, if you see that it has been worded according to that particular section, which has 30% tax rate, which has restriction on carry forward of losses and restriction on set off, all those things are there. So it has been worded like that because we believe that it is a special category of asset and should be treated differently.
Perfect. Ramesh ji has some comment to make.
To be fair to I think this is nascent legislation. Actually, nobody.
So I don't think either we agree that there is no fairness in taxation, and if we do agree on that point, so the amounts involved are huge. We are talking of a few lakh crores of investments in crypto. Look at all the advertisements that are coming in every day in the newspapers. Right. All the front page is being taken up by crypto exchanges. So the college kids are investing in crypto. So I think
so therefore it was time that the tax administration took cognizance of this. And as Kamlesh ji has rightly said, we make no distinction between legal or illegal income. Income from whatever source is taxable. So I think the legislation would, keep pace once people get to understand and the intricacies and nuances of this particular issue.
Perfect.
I would think at the moment, this is just an introductory legislation.
Mukesh Bhai has taken Kamleshji's, comment to heart, and he's already started redrafting the definition.
No, I just wanted to make one point in defense. When the tax legislation follows a regulatory environment, there is criticism that you should have had a tax framework before the regulatory framework. Here, I think the tax framework has come before the regulatory framework with a clear intent that this is an area which is going untaxed and hence it should be taxed. My objection is not on taxability of crypto.
Yeah.
If a resident Indian who's taxed on a worldwide income basis, the of legality, it should be taxed. My question is more on the fact that the rate of tax and the manner of taxing it suggests an element of taboo associated with crypto.
Syntax. Yeah.
So we are losing out on larger economic benefits of crypto.
Yeah.
Because if on one hand, the lawmakers are talking about amending the RBI Act to bring a digital rupee on par with a tender, I have no doubt in my mind that in less than 2 years' time, when there is some form of consensus that is arrived at, either at a G20, I heard that in the February G20 meeting, crypto is on the agenda of the G20 finance ministers. And I have no doubt in my mind that a consensus will evolve. And if a consensus evolves and you're looking at crypto as a valid tender, then I think this basis of taxation, which is penal and punishing, could be a downer from an overall tax policy perspective.
Digital currency is here to stay. The New York City mayor is receiving his salary in Bitcoins. So are several other policymakers in the US. Tesla owns $2 billion worth of Bitcoin or so. It's absolutely here to stay. You can call it illegal till the cows come home. People are going to go and invest in crypto no matter what. If not on Indian exchanges, from foreign exchanges for sure. Rameshji, you've been raising your hand. Please.
I think there should be a clarification that anything which cannot be electronic traded or transferred or stored, that should not form part of cryptocurrency. Second thing is we have been talking about the taxation of cryptocurrency at the maximum marginal rate without any set-off of losses or carry forward of losses, basic exemption, etc. But in Supreme Court case, Dr. Qureshi, even if you are carrying on illegal business, then the income would be taxable and all the expenses incurred for earning for this illegal business should be allowed as a deduction. So this is 286 or 287 ITR is very, and then nothing is there whether mining, how the mining, the people who are doing the mining in that cryptocurrency, how they would be taxed and whether they would be allowed any expenditure or not about the depreciation, interest, etc. So they are not dealing in crypto, but they are just validating the cryptocurrency transactions and then they get the mining commission.
So, perfect, Rameshji. Renu, by any chance, TCS is looking at, at Bitcoin as to pay salaries or something?
Not yet.
Yeah, Renu, any issues you picked up here? Is your son into cryptos? If yes, are you taking interest here?
No, I haven't, to be honest. But I completely agree with what all the prior speakers have said. I think it's still nascent, and I do think that the definition needs more clarity. Like, earlier we said that probably even loyalty points or frequent flyer points would also qualify as the definition stands now. So, while we know that the losses cannot be adjusted against any manufacturing or other activities to escape tax, I think it's still not clear whether the gain from one crypto can be offset against the loss of other coins, So like I said, it's still very nascent. And also I think there are other issues, like if I've been gifted a crypto, like you said, if my son is doing crypto and he decides to give me a crypto, how will that be taxed? So I think a lot of open questions, but I think the fear or the concern that crypto could be banned any other day, I'm not sure that is still there or that has disappeared, because people who are awaiting clarity can now invest. So I think even institutional investors would now be encouraged.
One point, Arunji, there is nothing in the law which disallows setting off losses from one crypto to another, from another crypto. So
The
That
CBDT
I think
apparently has clarified that no loss will be allowed. Kamlesh, you want to come in here?
Yeah. I will basically respond to various questions which have just been raised by the speakers as well as what is in the chat box. So Ishita question is that what about crypto liquidated outside India and money routed back into India? Now, probably, let us try to understand that if an Indian resident is doing it, first of all, I'm not sure whether if you have a wallet here in India, you can transfer it outside India. But nevertheless, if an Indian resident, whatever income he earns, he is taxable for global income. So if he has a wallet outside India, maybe this particular, so this provision will still apply. We may not be able to, get the information as such, but law is there. Now, how it will be monitored, that is, first of all, we are still grappling with that what should be the wordings in the law. And of course, as these things become more regulated and OECD is working on it, exchange of information will develop and all other things will develop, then probably these administrative issues will be taken care of. And so far as crypto exchanges, agents, and brokers are concerned, their income is a professional income or business income that will continue to be taxed the way it is being taxed right now. Then Veena ji has asked that question, which even Renu ji referred to, that setup of losses from one VDA to another VDA is allowed. So what we have this section 115 BBI. Basically, I will tell you the current position. Whether that position BBH, sorry, not BBI, BBH. So whether that position is correct or not, I am not commenting on that, but that is how it is right now. So subsection 2, in clause A, it uses the word under any provision of the act. That means no set off of any losses will be. So clause A deals with a situation when you have income from VDA. So if you have income from VDA, then no set off of any loss shall be allowed to the assessee. Under any provision of the act. It does not say under any other provision of the act. It says under any provision of the act. That means even under this provision of the act. And clause B, which is there, it says it is for a situation where you have loss from VDA and you want to set off that loss from income from something else. So that also it prohibits. It says any other provision of the act. So basically, idea is that clause A prohibits even setting off of losses within VDA. So that means if you have a transaction today, you have a gain and tomorrow you have a loss, can you set it off? Clause A says, no, you cannot set it off. That is the position right now. Now, whether that, and this has been borrowed exactly from BBE, as I told you earlier, it is already there. It's not something new. Exact the same wording is already there. But of course, because currently it is not regulated, there is a fear that loss be generated, and it can be misused. So that fear is already there, and probably the right thing for any type of activity is that if it is regulated, then more fair legislature can be drafted. But obviously, I mean, this is something which we will take a feedback and we will consider that what should be the right position. Although, as a just this, very interesting point was raised in the IFA WhatsApp group by Sagar. I think that is also worth deliberation. I don't know what is the final outcome. So he said, very interesting point, that clause B says that the loss from VDA cannot be allowed under any other provision. That cannot be set off against any other income under any other provision. That means it can be set off against income under this provision. So basically what he was trying to say is clause A is saying no, it cannot be, but clause B is saying yes, it can be.
There's an anomaly, maybe.
Yeah, so I think that's a very interesting point, but whatever, I mean, one advantage of, discussion is that we get to know all these viewpoints and we can examine all those viewpoints and take whatever intention of the law is correctly reflected. So that's a very important point.
Good friend sir Jitendra is saying reduce crypto tax is trending on Twitter. Kamlesh ji is here, sir, reduce it please.
Now whether it is service or good, I'm not the right person to answer that. There are crypto exchanges. Would these be required to file detail? So let us understand this new TDS provision that has been introduced.
I was coming to that.
It says the person responsible for making payment. So that who is the person responsible for making payment? It could be crypto exchange. So crypto exchange has to deduct TDS. If it has to deduct TDS, it has to file a TDS statement. Or it could be individual also, because there could be person-to-person exchanges also. And that is possible because once it is regulated, maybe that may be prohibited. But right now it is not prohibited. So if it is person-to-person, in that case, the person who is responsible for making payment is required to deduct TDS, even if he is an individual who does not have a business income. Only concession that we have given in that case is that you don't have to file TDS statement. You don't have to be bothered about 206 AB, which requires double TDS if the other person is not filing tax return. So that he is exempted. But otherwise, he has to deduct TDS if it is more than 50,000. For others, the limit is 10,000. So, crypto exchanges are very much in the picture here in this situation.
Kamlesh ji, just a quick question. If I were to choose to receive my salary in Bitcoin and assume that 6 months of a year or 5 months of a year I'm outside, so I'm still taxable possibly in India, and I receive my salary outside in Bitcoin, what would be the rate of tax, sir? If I am receiving my salary in Bitcoin?
No. That is your salary. So that is your normal tax rate. It is not. You are not transferring it.
I'm not transferring.
You are not transferring it. Your company has to bother. Your employer has to bother whether it will get hit by this section or not.
And what if someone invests in foreign exchanges, foreign Bitcoin exchanges? In that case, how will you track it? How is the department going to, how are they going to comply with these rates?
Yeah, so that I explained earlier that this is a starting stage. We have drafted a legislation, and obviously, getting information from. See, there are so many provisions. The basic all comprehensive provision, Section 5 says that all your global income are taxable. Now, that question which you just asked me, anybody can ask, how do you know what global income I have? How do I know? Is because now we have exchange of information mechanism. Earlier we didn't used to have, but now we are getting information from other countries. In future, we will get information about crypto trading also from other countries.
Sure, perfect.
One more very important question that some Geeta Bhatia has asked. What about taxability of earlier years? Now that's we are not saying that earlier year was not taxable. Earlier year was taxable the way it is. If it is capital gain, you go to capital gain section. If it is other sources, you go there. If it is a business income, you go there. So nobody has said that earlier year was not taxable. But from next financial year, it is going to be taxed under this section.
Perfect. Thanks, sir. Mukesh bhai, final word on this, because we have to do justice to other provisions as well.
No, let's move ahead, Arun.
We'll move ahead.
Yeah.
Perfect. The next one is litigation management provisions. We'll come to Ajay ji, but Mukesh bhai, I would first like you to set context, because we are going to be dealing with the updated return, Mukesh bhai. If you could set the context first on the updated return, what exactly the provision talks about, and then of course I'll also put questions to Ajay ji and Kamlesh. Yeah.
No, I think Mr. Vashne answered the philosophy behind the updation of return and the 2-year window, which, as I understood, was to avoid repetition of 1 in 48 proceedings. On litigation management, overall observation is it's a positive move. It will certainly not, burden the judiciary with repetitive appeals that the department will file with the higher appellate forum. My only point is when you're talking about filing an appeal in the higher appellate forum, what if, there are questions of law, there are questions of fact, there are mixed questions of law, mixed questions of fact arising out of the same appeal. And there is also now a growing tendency to file appeal in the High Court. And because the High Court is mandated to look at only substantial questions of law, you basically say that there is perversity in the findings of the tribunal, which again, High Courts now will be forced to examine under 260A. So it is unclear. So on one hand, it's a very reformative move, but on the other hand, practically how it is going to work with field officers is something that I would like to hear from Mr. Varshney, because I'm concerned that under the garb of mixed question of law and fact, under the garb of findings being perverse, there could be tendency to keep these appeals alive for many years. So imagine a situation where a taxpayer gets a ruling from the tribunal and it is in his favor, and the department considers this new provision and does not file an appeal. The matter goes to the higher appellate forum. Once the matter goes to the higher appellate forum, it could be anything. High Court may send it back, High Court may reverse it, High Court may reverse it, Supreme Court may again come back to the tribunal. How is it practically going to work? So, great move, but is it actually going to reduce litigation? I think that you need to have a very detailed enabling law, whether that comes by way of rules or CBDT circular, to actually reap the benefit of this important reformative move. So that's the only opening comment I wanted to make, but I thought at a practical level, these issues do come up on litigation management.
Ajay ji, we'll go to Kamlesh ji, but Ajay ji, on the updated return, you feel that the provision itself has been reasonably well drafted. You have a lot of restrictive covenants here or clauses, sub-clauses. The person should not be eligible to furnish an updated return if search has been conducted, books have been requisitioned, survey notice has been issued, under 132A, also where proceedings is pending, completed, assessing officer has communicated possession of information under PMLA or black money, or the Benami Act and so on, and or prosecution proceedings have been initiated. So you think this is reasonable?
I think, Arun, as we heard, Kamlesh ji, this is, I think, a welcome change, and this is placing trust in the taxpayer. Other than the prohibited categories which are enumerated in that provision, others can file an updated return if they missed out on reporting some income, or maybe they have, inflated their expense or so on and so forth. So I think the chance is given to the taxpayer in order to make good any deficiencies in the return already filed. And I think one should welcome such a move on the part of the government of placing this trust. And as Kamlesh ji pointed out, this is in order to prevent and circumvent, initiation of proceeding under Section 148 to tax such income where the department has information about such income having escaped tax. So I would laud the initiative on the side of the government. I have just one point for Kamlesh ji on this. Sir, when I file an updated return, and you have given me the chance to file the updated return, what will be the position with regard to concealment penalty? So I have suo moto voluntarily come forward and file this return. Now, how does it operate? Will this be treated as an admission? Will this be treated when you actually sit down to compute the penalty? You would say that this is not part of your income reported in the original return filed under 139(1), and therefore we expose you to penalty. So if penalty is sought to be levied, this will act as a dampener. Not many people will want to come forward to file an updated return and say, let the department, find out and detect this income.
Ajay, since you made the point on levy of penalty, I just thought that not just in the context of the new provision, but there are currently challenges even on the faceless assessment. Just wanted to make use of this opportunity and mention it, Mr. Varshney, that assessments are completed under the faceless assessment scheme. And because the system is running on an automated basis, penalties are also getting levied by the National Faceless Assessment Center as well. So what was a benefit available in the non-faceless scenario where officers were keeping penalty proceedings on abeyance, now they are getting automatically levied. And as a result of this, there have again been several writs in the High Court on the due process of law. So this could be another, kind of a roadblock for the success of faceless assessment. But just wanted to make the same point on penalty in the context of faceless assessment.
Yeah, Renu, you want to chip in here?
Yeah, sure. So I think the good news on the faceless assessment is the fact that it was to extend to transfer pricing assessments, to the DRP, to the tribunal appeals, which was to happen in 22-23. I think that has been deferred to 1st April 21. And now the functions of the technical unit will also include determination of arm's length price, valuation of property, technical assistance relating to double tax provisions. The bad news, however, is that it now will also include the reassessment cases, and it is proposed to do away with the regional faceless assessment center concept. So before the assessment, the erstwhile provisions of Section 144B, they provided for an elaborate scheme for this faceless assessment. It laid down the procedure to be followed, which inter alia included serving the assessee with a draft assessment order to show cause as to why the variation should not be made. So this practice was in consonance with the principles of natural justice. And an important section was subsection 9 of the section, which expressly provided that assessment made under subsection 3 of section 143 or under section 144 shall be non-est if such assessment is not made in accordance with the procedure laid out under the section. Now, like Mukesh said, between 1st April 21 and I think June 21, several assessments were completed without adhering to this procedure as laid down by section 144B. And there was a tsunami of petitions before the High Court challenging this action on the grounds of violation of principles of natural justice. Now, invariably, the courts obviously decided this in favor of the assessee. In fact, there is this Gujarat High Court case in the case of, I think, Gandhi Reality, where they held that the assessment order will be non-est even if the principles of natural justice have been followed. Now, after the amendment, the finance bill now proposes to omit the provisions of subsection 9 of section 144B, that too with retrospective effect, that is from 1st April 21. Okay, that is from the inception. So it was introduced, but it's being backtracked right from the date of inception. So even now, what it means is that if the procedure prescribed under 144B is not allowed, the assessment order will be non-est. So I personally believe that this retrospective amendment should not and cannot impact the cases which are already decided by the courts. And even in the remaining cases, notwithstanding the existence of or omission of the provisions of subsection 9 of section 144B of the Act, I believe the principles of natural justice should continue to be respected by the courts.
Perfect. So, yeah, Ramesh, you want to chip in here, and then Ajay ji wants to come in here quickly. We'll have a quick word from Ramesh ji, and then we'll go to Kamlesh ji first.
Sorry, Ajay ji, sorry.
Renu, the difference is with the striking down of subsection 9 of 144B, we were seeking to challenge that the assessment must be quashed as non-est, and you cannot give another chance to the department to make good the deficiency. So there is a difference between the courts in some cases were setting aside the assessment, enabling the department to pass a fresh order versus quashing it as non-est. So this matter was reserved by the Delhi High Court in a batch of matters to deal with the implications of subsection 9 of section 144B, in which case the department then could not have passed a fresh order because the limitation for making an order would have elapsed by that time. So that's the essential difference between the set aside. Of course, on violation of principle of natural justice, the assessment can still be set aside today and a fresh assessment directed. It will not be non-est or it will not be null and void. Yeah. I think that's the difference that has come in. One had thought that with this provision of subsection 9, the revenue was seeking to be accountable for its lapses. When they said, all right, quash the assessment as non-est if we have failed in our duty.
Perfect.
Ajay, except that even if this provision is absent, I think in a writ jurisdiction, the court can still.
Sure. But this was a statutory provision. So
correct. And with no disrespect meant to Delhi High Court, I have this doubt on the correctness of the Delhi High Court judgment to set it aside.
Perfect. Ramesh ji, you want to make a quick point, and then Kamlesh ji will respond to the batch of comments and questions.
I have one point that even historically, even subsection 9 of 144B is removed. With retrospective, principle of natural justice will always prevail and the matter has to be re-examined afresh. There are numerous decisions before this. And second thing is how this voluntary disclosure will work. Like we have additional 25% or 50% depending on within 12 years or 24 months with interest, 25% or 50% of the interest plus surcharge, tax plus surcharge, gross tax. Now I can go back 2 years. So now my return for March 2021 is expiring in March 22. I cannot file return under 139 8A. Now, this will not receive the extent of the, this bill will not be passed before, say, April or May. So how do I deal with this?
Kamlesh will respond to all the points here.
So I have so many questions, so difficult to remember. But anyway, first of all, bill will be passed before 31st March, so that position will not arise. That used to be the situation when budget was presented on 28th of February. Since this government has shifted the budget presentation to 1st February, every time the not only bill is passed, but even president assent is obtained before 31st of March. So now we don't have vote on account for that reason. So that position will not arise. So where do I go? Yes, Mukesh ji spoke about collegium and what if it is a mixed question of law. So see, the purpose of this provision which has been introduced is to reduce litigation, and it is for the administration, that is for the CBDT, to ensure that this provision is successful. That means it is taken to its true logical conclusion. Otherwise, there is no use that the provision is standing in the law book and this provision is not being used and appeals are being filed. Where it is a mixed question of law, it should not go, that's obvious. And not only it is collegium decision, assessee also has to concur. Consent of assessee is also required, that yes, it is an identical question of law. And idea is simple. Now that we have a technology, earlier when 158 AA was in operation, we did not have technology. So probably, and it was not, it was only confined to the case of the assessee, not in any other case, and pending in Supreme Court, not in jurisdiction High Court. So there are a lot of changes which have taken place in this section to make it more attractive than the existing 158 AA. And we have full, confidence and expectation that this will reduce litigation from departmental side. And as I said earlier, it is for the administrator, that is for the CBDT, to make it successful. And hopefully what the concern you have will not be there. Only when there is actually a mixed question of law that they will say that, sorry, this is a mixed question of law, so we should not defer this appeal. I think we should give it an honest try and see that Income Tax Department is successful in reducing the appeal that it has to file before High Court or ITT or High Court. So, and then Ajay ji spoke about penalty so far as updated return is concerned. Definitely, I have noted that down, and I agree there needs to be clarity on that aspect, that that penalty should not be there, and then only this will be successful. On my personal, my personal view is that I agree with you that there should be a clarity that penalty should not be there, and only that 25% or 50% additional tax should suffice. Otherwise, the intention of this particular provision is lost. And once again, it is a very good initiative, and if people don't come forward and update their return, then the purpose is not served. And it is once again for CBDT to ensure that more and more people come forward to update their return whenever any deficiency is found in e-verification process. Otherwise, as I said earlier, you can't go after everyone. You can go after only 2-3%. Other 97%, you should make them comfortable and pay their tax on their own. So that is the philosophy. So I fully agree with what Ajay ji said. Then Renu ji spoke about 144B9, which was also commented upon by Ajay ji and all. See, it is as correctly said that natural justice has to be followed, but just because there's a long drawn process listed in section 144B, and if one of the item is somehow not followed, then it is non-est. That probably is something which is was not correct, and therefore it was withdrawn retrospectively. And as has already been commented upon, that even courts are not holding it non-est, they are also setting it aside. So idea is, yes, natural justice should be followed. The amendment of 144B9 does not mean that natural justice should not be followed. That is not the message which is tried to be given. And once I have, spoken about retrospective amendment, so probably I will like to go back to the opening remark.
On faceless, I have a couple of questions here.
Yeah.
Has the CBDT or has the government been surprised by the spate of writs? Have you been taken in by surprise? Number one. And number two, the faceless regime has now been here, I think, for almost 18 months or so. Largely, are you happy with the way things are going? And what's the feedback that you've received from the ground? So,
see,
how are you looking at the faceless regime?
Arun, this is more of an administrative question. See, let me tell you one thing. Arun, this is to all these 402 participants. Arun has been a seasoned, host, and after the budget, he has been going around and asking too many questions. So he has a lot of experience on this budget and everything.
No, but on the faceless, faceless is one area which has generated a lot of controversy.
I'm coming to that. So basically, it is like a situation when Arun has gained expertise in bowling fast, and our Indian batsmen are new, facing him in English condition. So, but I thought I will be able to face his bowling because ball has been designed by me. So I know where it will bounce, where it will pitch. But you have got a new ball. That administration is not my ball. So I will not like to comment on that. How this 140 faceless assessment is administered, and because that's not my area. My area is tax policy. So I will like to stick to my area of tax policy. So I will not like to comment on that.
Yeah. Any other question, Mukesh, you want to come in there, please?
I just have one suggestion to make, and that is taking into consideration what we are trying to address. You have drafted 139(8)(a), keeping in mind two scenarios. One where a return is filed, second where a return is not filed. Let's assume a return is filed. You have carved out exceptions where a taxpayer will not be eligible under the new scheme. One of the exceptions says any proceedings for assessment or reassessment. My suggestion is that you take away the word assessment, you retain the word reassessment. I'll tell you practically. Here is a scenario where a taxpayer is, during the course of faceless assessment, comes to an understanding with the National Faceless Assessment Center that he ought not to have claimed a deduction, or he ought to have declared something which he has not declared. Allow him this opportunity here, because this is your opportunity to collect taxes. And you will avoid a lot of disputes as well. If your entire assessment procedure, sir, is moving to National Faceless Assessment Scheme, then why not give away that? So you retain all the carve-outs where you will not make the SSC eligible, just one carve-out. Let assessment be taken away. So if you don't take opportunity in reassessment proceeding, but give him an opportunity in assessment proceeding, you will see that you will be able to curtail a lot of disputes. That's my only one suggestion.
Yeah, I have noted that suggestion. So we will discuss that suggestion.
And I have a point on this repetitive appeals.
Yes.
Earlier the 158AA was sparingly being used by the revenue. Now, hopefully, with this new amendment in 158AB, which also extends to appeals before the tribunal, I hope the department will make use of this provision to avoid repetitive appeals. But having said that, I have one suggestion. You see, if you look at the cases before the DRP, now the DRP finds its hands tied because the revenue cannot file an appeal against the order of the DRP. Now, even if the issue is covered in favor of the assessee by the decision of the tribunal, even the High Court, and the SLP is pending at the instance of the revenue, the DRP will record that the issue is covered in favor of the assessee by the decision of the tribunal in the assessee's own case, or by the decision of the High Court in the assessee's own case, or any other case, but the department's appeal is pending in the Supreme Court. So therefore, we sustain the disallowance or we sustain the addition. Now, the consequence of this is that the assessee has to file an appeal, the assessee has to file an application for stay of demand, and therefore the entire process has to run. Now, if with the increasing use of the DRP mechanism for TP assessees or for those or for foreign companies, if this lacuna can be addressed, if this issue can be dealt, then 158 AB can be used by the revenue even in these kind of cases, and it will avoid a demand being created, being reflected in your dossiers, the tribunal having to deal with these questions of stay of demand, and the appeals being pending in the tribunal.
Yeah.
And if you do take up statistics from DRP, they will tell you that there are so many issues on which they find their hands tied.
Yeah. Rameshji, a quick comment from you.
One thing I have for Mr. Kamal Vasne, one is that the thing is that even after faceless assessments, lot of reassessment notices or 263 notices are being given. So either the faceless assessments are done in a very hurried manner, or they are not properly done. So this system should be the faceless assessment should be such that it should reduce the litigation or reassessment proceedings or revision proceedings.
No, I won't answer, administrative questions.
No problem.
Whatever is coming out of budget, I will answer.
Perfect. That's perfectly taken.
Just one point for Kamleji. Kamleji, I think I'll just take off from what Mukesh said about 139(8)(a), where assessment is pending. Now, if you are to remove it, that'll be certainly very welcome. If suppose you are to retain it, now you need to define when an assessment can be said to be pending. Now, these issues have come up before the authority for advance ruling. When an assessment when issue is said to be pending in assessment. So there, merely because there is a notice issued under 143(2), there is a standard questionnaire, the authority came to the conclusion that cannot be said that the issue is pending in an assessment.
Yeah.
So if you remove this bottleneck, I think that will be the optimum solution. If not, please explain when can an assessment be said to be pending.
Oh, sure. Yeah. That's
I'll just run through a few comments. One of them, interesting comment. One says that you should allow updated return for downward revision of income.
No, I would let me answer to that. See, 119(2)(b) is already there. If you have a refund pending, and your time to file a return or time to file revised return or belated return has gone, there is already a provision of 119(2)(b) that you can file a claim for refund. So that provision is already there. So one should make use of that provision.
Perfect. And generally, this is for you, Renu. 25% and 50% seems reasonable.
Sorry?
25% and 50% seems reasonable.
Yeah.
Additional tax? Reasonable?
No, not at all. Not at all.
Not at all?
Not at all. Not at all. I think it's too much on the higher side.
Okay, fine. Ajay ji, yes or no? You agree with Renu?
I think that's a cost that the taxpayer has to factor. You have to make your choice, whether you want to file an updated return or you don't, and you leave the tax department to detect your undisclosed income.
Perfect.
My only submission in this is, if you want to make it encourage the voluntary compliance, then if you make the rates at 25% and 50%, I'm not sure anybody would be incentivized to actually, file a revised return or updated return.
This is coming as a sort of penalty. Actually, these rates are too high.
Yeah.
So penalty ki zarurat hi nahi.
There is.
Next one, reassessment. So that is Ajay ji's favorite provision in the Income Tax Act.
Yes, one moment. There are few doubts on whether it will be applicable from assessment year 22-23 onwards. See, we should try to understand that this is a procedural provision. So 1/4/22, it says 1/4/22. It does not say assessment year 22-23. So that means after 1/4/22, you can file updated return for whatever time backward you can go as per the provision of 139(8)(a). That means 2 assessment year previous prior to that assessment year. So I have to calculate backward, but it's not that only assessment year 22-23 returns can be updated. Even prior 2 years return can also be updated, but that facility will be available after 1/4/22.
Perfect. We'll go to reassessments now. Thanks so much, Kamlesh. You've been really sporting in answering all the audience questions as well. My task has been even more easier. Ajay, the provision which has kept you busy for over 30 years, which has made you a superstar, contributed to you being a superstar in your field. Ajay, rationalization of reassessment provisions. We've just been agitating for 35 years since this provision was introduced about what constitutes reassessment, what is an opinion, what is information, when is the income tax officer right to reopen, and so on and so forth. Can you just take us through the rationalizations? And according to you, does it address most of the burning issues right now?
I think, Arun, there are no major changes so far as the reassessment provisions are concerned in the budget for this year. In fact, the Finance Act 2021 had recasted the provisions relating to reassessment wholesale, and there is a new regime now for reassessment. In this year, all that is being done is there is some realignment, there are some errors that have been sought to be streamlined. And I think the only major amendment that I can possibly think of is this amendment where the time limit has been extended for initiation of reassessment proceeding from 3 years to 10 years.
Yeah.
Earlier, it was restricted to where there is documents or evidence which reveal that the income chargeable to tax is represented in the form of an asset.
Yeah.
Now, this is extended to include expenditure in respect of a transaction or in relation to an event or occasion, or any entry or entries in the books of accounts, which have escaped assessment. So the extended time period of 10 years will also be available, notwithstanding that the escaped income is not represented in the form of an asset. If there is evidence found with respect to such undisclosed income in the form of expenditure incurred in respect of a transaction or in relation to an event, or if there you find entries in books of accounts, need not necessarily be represented by an asset.
Perfect.
So I have one question for Kamlesh on this 149. I have really not figured out this substitution in the first proviso, where earlier that words used were such notice could not have been issued at any time on account of being beyond the limit specified under provisions of clause B of subsection 1. This is now extended to say a notice under 148 or 153 or 153C could not have been issued at that time on account of being beyond the time limit specified under the provision of clause B of subsection 1 of this section of 153A or 153C. And this has been substituted from 1st April 2021.
Yes. So I will answer two questions. One, the direct question that you have asked, and then probably I will also touch upon some of the retrospective amendment part that you had touched in the beginning in your opening remark. So basically, this is a correction in the drafting, which was not there earlier, in the sense that the purpose of that proviso is when we extended the time limit from 6 years to 10 years, the legislature did not want that the notices which could not have been issued because of 6-year limit should not get issued under 10 years limit, right? So, so that was the purpose, that going forward, you can issue for 10 years, but something which is already getting time barred, you should not get covered. Okay. Now, in that situation, probably what was happening, that earlier we had two different regime for issuing notices, one for search assessment and one for non-search assessment. Now, after last year's amendment, those two regime got merged. And this amendment was creating difficulty because what could have been issued under the search regiment was getting hit. Because in search cases, there was already a limit of 10 years.
10 years, correct.
So that was getting hit. So it's only a corrective provision, nothing new that is happening. Okay. So coming to some of the retrospective amendment that have been done, whether here in this case or in the case of, let's say, goodwill or slum sale. Now that is if they are from last year's amendment, so they have been taken to last year's amendment so that there is no gap. So some of the retrospective amendment, which are clarificatory, which are correction of mistakes of last year, they are retrospective because they ought to be. That is one thing. Then there are some retrospective amendment which you will also appreciate are justifiable. For example, in the case of search assessment, we have said that the certain time period is to be excluded, and that time period is starting from the initiation of the search or making of requisition and ending on the date when things are handed over to the assessing officer, not exceeding 180 days. This period is to be excluded. Now, if we had made it applicable from 1st April 2022, Imagine what would have happened. That a search assessment is to be filed on 15th of March, and you expect assessing officer to complete the assessment on 31st March. Is it humanly possible? So their logic for certain retrospective amendment, and that section 40 retrospective amendment, we can, I think one of the fellow speaker, I don't know whether Renuji had raised that or somebody, that it has been made from assessment year 4-5, while this government committed that it would not be. So I will just, say what was the commitment of this government, and let us see whether we have violated that commitment or not. So this was like the first budget speech of Modi government, and it was also the first budget of late Arun Jaitley ji. And this is what he said. I'm reading it out. The sovereign right of the government to undertake retrospective legislation is unquestionable. However, this power has to be exercised with extreme caution and judiciousness, keeping in mind the impact of each such measure on the economy and the overall investment climate. By this retrospective amendment on cess, are we going to impact the investment climate? Isn't it something which was known earlier? Taxpayer had been claiming it as a non-deductible. Tell me all those taxpayers who have started claiming in last 1 or 2 years, did they started claiming from assessment year 5-6? When cess was introduced for the first time? Let us be honest to ourselves. We have started claiming only when we got some decisions. And those decisions were, and I don't mind saying, those decisions did not consider Supreme Court judgment. I mean, you allow some relief to the taxpayer, which hurts government revenue without considering Supreme Court judgment. And then everybody is taking additional ground of appeal in IT80. If this is not a fit case for retrospective amendment, as per the leeway, as per the wording of late Shri Arun Jaitley ji, then nothing is a fit case for retrospective amendment. And he said, this government will not ordinarily bring about retrospective change. This is not ordinarily situation.
Got it.
Exceptional situation.
Okay.
All those who have been claiming, I'm using a very strong word, all those who have been claiming this as a deduction were actually hitting on government revenue.
Perfect. Ajay, I don't know whether you answered this, but we've had so many of these reassessment cases, and the Delhi High Court delivered a big one. So, by any chance, any of these amendments was the Delhi High Court judgment or the other High Court judgments on the reassessment controversy over, over the notifications which increase the time limits of issuing of notice under old regime? I'm not sure whether you covered it. Forgive me for
these amendments don't deal with the decisions of the Allahabad, Delhi, Rajasthan high courts, and Gujarat has reserved judgment. Bombay is in the process of hearing the matters. Now, those judgments have not been sought to be overruled or nullified by any of these amendments because the matter is sub judice before the Supreme Court.
sure.
As far as the Allahabad High Court judgment is concerned, the SLP has already been filed, and I am sure they'll be in the process of filing SLP against other High Court judgments as well. So the government has, and I think rightly so, left it to the wisdom of the Superior Court to determine and adjudicate that controversy, and no amendment has been made as of now to upset or overrule the decisions of the High Court.
Mukesh bhai,
These amendments don't deal with those issues, that issue at all.
yeah, I can't let go of this topic without asking Mukesh bhai. He also is one of the top litigators in the High Court and Supreme Court, albeit reassessment may not be his favorite topic.
Yeah, I have not made my career on reassessment. I just wanted to point out, let's step back a little bit. The new scheme of 2021. Yeah. You come out with this scheme because the plethora of judgments on recording of reasons, application of mind, tangible information, disposal of objection, giving time after disposal of objection was the issue. Scheme is great. I don't know whether it was a case where it was rushed legislation last year, but nevertheless, I'm willing to give the benefit of doubt that things that are intended to be the intent of the legislature, you can bring it out retrospectively. I'm not going to get into that debate. But let's now look at what have you amended, sir. You have added an explanation to 148A to define what is information with the assessing officer which suggests that income has escaped assessment? You have corrected the entire procedure to come to the conclusion how income has escaped assessment, but you have carried out substantial change on what is information. And let me tell you what is the outcome, because it could be very self-defeating to the larger intent that you're looking at it. Any audit objection to the effect. Now, this audit objection was dealt with by the Supreme Court in FIS Global Solutions case, and Supreme Court very clearly said audit objection being only information, reassessment notice on audit objection is not sustainable. Fine. You have the power to override the Supreme Court law, but you have done it. Second, information received under agreement on section 1998. Absolutely no objection, because if you receive any information, you have a right to carry out an assessment. Now, here comes the problem, sir. Number 4, information available to the officer under a scheme notified under 135A. 135A was put in the law to give trust to collection of information under the faceless assessment scheme. 135A was nothing but an expansion of 133 and 133B powers which were there in the survey. Now, my question is that if the Department of Revenue has information on a dynamic basis available to it with so many sources, how will 135A help? By putting 135A, I'll tell you what will happen. You have the information under 135A, you collected that, but you haven't acted on it. Now you are taking powers under the reopening to do the assessment. Now, I don't know whether this is to be able to cover up for the shortage or the inefficiency of the field officers to complete the assessment on time or to act on the information on time. But the outcome of this is a degree of uncertainty for the taxpayer. What is likely to happen is that you will now make use of this proviso under 135A information and reopen it. At least that is a power that has come in. I'm just telling you what could be an unintended consequence of that. The last is you're saying information which requires action in consequences of order of a tribunal or a court. I have one small suggestion to make. Please take away tribunal and court, mention Supreme Court. If the Supreme Court has given a judgment, you please assume power, because the Supreme Court judgment is the law. High Court judgment is not a law. Tribunal judgment is not a law. There are contrary decisions. Imagine a situation where tribunal takes different view, high courts take different view. This could be a hair-splitting exercise to reopen the assessment. So provide for it. Information will include consequence of the order of the Supreme Court, because the Supreme Court order is a law. So I just felt the no objection against the scheme, but kindly give a serious consideration to explanation 1 of 148A. I have been flooded with requests how this is going to apply, and I myself am struggling that this, my first impression was, is this opening up now another floodgate of litigation, which is certainly not the objective.
Perfect.
Yeah,
well,
I'd like to reply. These are very good questions, and I think participants should get answer to these questions. Very relevant questions you have asked, Mukesh ji. So basically, let me try to explain what is explanation 1. So explanation 1 is because your proviso says that you can issue notice under 148 only when assessing officer has information which suggests that income has escaped assessment for an assessment year. Then explanation 1 says, what is information which suggests to the assessing officer? And then currently it says that, risk management strategy of the CBDT or the final objection of Controller and Auditor General. Now, everything can be put in risk management strategy. You may not even put it down here in explanation 1. So nothing that, it is expanding the scope of explanation 1. CBDT can always put it down under risk management strategy. And that is only power of CBDT. Here we are going to the legislature. So nothing more is happening. Let us try to understand. And then 3 years limit apply to this information. Once again, let's try to understand. Beyond 3 years, you can go only when there is more than 50 lakh asset expenditure or entry. So this information, 3 years limit is applicable. So let's get that, very important concept right. Now, coming to that, that particular point which was raised by Mukesh ji about e-verification scheme under 135A, the mechanism is like this. And that is why you will see that we have given 2 years for updated return. And why we have given 2 years for updated return? Because 148 limit is 3 years, so that we get 1 extra year. So idea is that whatever information that we have gathered, that information will be analyzed by the verification scheme. That verification scheme has already been notified. Now the people sitting in verification scheme will confront that information to the taxpayer. Taxpayer will give his reply that everything is explained. There is nothing that I have hidden from the income tax department. Or he may realize that yes, his income tax return is not correct and I must reflect this and I must update my return. And for that 2 years are there. Now if he does not update his return when 2 years expire, this is where it is intended to go from e-verification scheme to the assessing officer for issue of notice under 148. That is what it is intended. So it is not that all the information that we have gathered is going to the assessing officer for issue of 148. So it is all being well planned so that most of the people, when they are confronted with the information, update their return if they have to update, or it is already explained information. So that is the purpose. So it is not something which is giving a new handle to the assessing officer or creating new controversies. So I think that point we need to understand, and that 3 years limit will also apply. If we put Supreme Court decision will never come in 3 years. Even ITT decision may not come. But we need to keep in mind that all this information is relevant for 3 years notices.
Perfect. I think fair point, Kamlesh ji. Just in a lighter vein, yesterday, a senior department officer was not sure, has been calling up for the last 5 days. Review petition ka kya hua Supreme Court mein on this engineering analysis software, because whether I should file an appeal in ITT or not. And finally, I think they filed 3 appeals in ITT. But these are the things that happen at the ground level. But yes, that's the fun part of being a litigator, being involved in tax litigation. My good friend has a suggestion that with the expanded scope of reassessment, consider reinstating the period of 6 years in non-such cases. 10 years period is very long and creates too much of uncertainty, especially in M&A transactions. That's fine. We go to the next part. We really need to hit ground now quite fast.
Just if you'll allow me, just 2 minutes.
Sir, 1 minute, please. 1 minute.
1 minute,
please.
okay. On this reassessment, I think I must come to Kamleshji's defense on this question of this explanation, that any information which requires action in consequence of the order of a tribunal or court, Mukesh, this need not necessarily be the income tax tribunal. And this can be in a court in any proceeding under any law. So if you have to give effect to any direction in a court, let us say in a tribunal's order, an NCLT order, therefore this might give rise to a case of reassessment. But sir, on this audit objection, you invariably find that your officers also do not agree with the audit objection. But because of the diktat or the internal guidelines within the CBDT, people normally fall in line with what the audit ultimately upholds, and therefore initiate, remedial action, whether it be by 263 or 147. So do you want to keep it so wide to cover an audit objection, even with which the departmental officers don't agree?
Yeah,
So I think that, that's a larger question and a very important question, that there needs to be synergy between the audit department of Government of India and the revenue department of Government of India, so that they are able to sort out the issues correctly, and only those issues are flagged where action is required to be needed. And there has to be a better coordination between the two. So that's I think solution which probably should come to the help. But otherwise, yes, if some mistakes have been committed by the officer and rightly pointed out by the audit department of Government of India, then action needs to be taken.
Mukesh bhai has a final word.
Yeah, I think that the audit process, once an audit objection is raised, it becomes virtually a de novo assessment situation. I will point out to you tribunal decisions and High Court decisions of Bombay High Court, where the officer says that I am compelled to issue a reassessment notice because there is an audit objection. Now, this is a situation where the views of the assessing officer and the audit is not aligned. And solely on that reason, the High Courts have said, how can an audit objection now override the function of the officer? I'm just pointing it out that this could cause a lot of friction, the word objection.
Yeah, we go to 14A. Ajay innocuous looking amendment, but could have an impact. So I'd let Ajay take the floor. Ajay, we need to be a little quick now, but yeah.
In fact,
Ajay 14A.
On a lighter side, Arun, when this amendment came out, I had frankly not seen. I was held up in some court hearings. The departmental officer who had argued against me at several places, starting with Daga and other cases, he called me up. See that we have undone what you achieved. We brought in a retrospective amendment. So frankly, I have seen now the amendment. Now the larger question is whether it is retrospective or prospective. I think that's a challenge that will still get to the courts, notwithstanding the language of the explanation, which says that this will always have been deemed to be the intention of law, but the explanation has been made applicable from 1/4/22. Rightly or wrongly, so the courts will really need to determine whether this can have retrospective effect from the time that section 14A was first brought into the statute, or should it take effect from assessment year 22-23.
Essentially, Ajay, just for the benefit of our readers, the viewers, we are saying the clause, the amendment says that there will be a non-obstante clause in respect of other provisions of Income Tax Act to provide that no deduction shall be allowed in relation to exempt income, notwithstanding anything to the contrary in the act, right, Ajay?
So this is, I'll just read, yeah, you read that, but at the same time, the memorandum says that the explanation is applicable from 1/4/22.
No, just Ajay, just two things. There are two amendments. Arun, there is one amendment in subsection 1, which is from assessment year 22-23. There is no doubt on that. That is from assessment year 22-23 onward. Then there is an explanation. So Ajay is talking about that explanation, which is from 1/4/2022.
Yes.
And he's giving his view on that explanation, not on the first amendment.
Yes, I got it, which is saying that
on the first amendment also, sir, it is made applicable from 1/4/22 only.
Yes, but you read the notes on clauses and explanatory memorandum, it says assessment year 22-23.
I'll just, for the benefit of,
I'm saying. So,
also read the second one. It's proposed to insert an explanation to clarify that notwithstanding anything to the contrary contained in this Act, Section 14A shall apply and shall be deemed to have always applied in a case where exempt income has not accrued, arisen, or not received during the previous year, and the expenditure in relation to such exempt.
Right.
Godrej voice se shuru hua tha Supreme Court. I think it was.
No. I think we need to go back to Daga.
Okay.
Daga, the special bench in Mumbai.
Justice Chandrachud, who's currently in Supreme Court, one of the senior most judges, authored one of the first decisions on.
No, that was Daga only.
That was
Daga, which I argued the special bench in Mumbai, which went to the High Court.
Yeah, Ajay, I'll just take 3 seconds on this and ask Mukesh Bhai also to weigh in. Ramesh ji wants to
what I'm basically saying is the amendment in subsection 1, which talks of that notwithstanding anything to the contrary contained in this act, this only seeks to suggest that irrespective of the fact that there may be allowance for such expenditure elsewhere in any other provision, that expenditure will stand disallowed in terms of section 14A. Now, the courts have expounded on the applicability of section 14A, especially in a situation where no exempt income is earned during the year, or you have multiple investments. Some of the investments have not produced any exempt income. They have said the formula will work only by adopting the instruments which have yielded exempt income during the year. Now, the amendment, the explanation seems to provide that notwithstanding that you have made an investment which has not earned exempt income, that investment will qualify for disallowance. So the expenditure incurred to make that investment will qualify. Now, our question, and Kamlesh, we had argued this matter in Breath Investment. My friend SD Srivastava is sending me a WhatsApp message. There the issue was that suppose today I make an investment in shares. The dividend at that time was exempt. Today you have made dividend taxable. Now, can you say that in future it is capable of producing exempt income on the basis that you might tomorrow shift the taxation of dividend back to the company by levying a dividend distribution tax? So the proposition in that case was you cannot be certain that this will produce exempt income whenever that income is earned. So on that basis, Virit Investment held that you would need to look at the income earned during the year from a particular investment, which went up to the Supreme Court and was confirmed by the Supreme Court in various judgments. So now with this amendment that you are seeking to make, and especially today when dividend is taxable and most investments are in shares. So if the dividend from shares is taxable, then in that situation, this is not capable of producing exempt income.
Yeah.
So I don't know if this explanation has been brought in to overrule, various judgments, whether this has any utility in today's scenario when dividend has been made taxable and you have very few avenues of earning tax-free income.
Perfect.
I hope, Arun, I've answered your point. Yes.
Perfect.
But
Rameshji, you
as
have
this question whether it is prospective or retrospective, we'll leave it to the courts to decide.
Perfect. Rameshji, you have a quick point, and then Mukesh bhai, and then we'll get to Kamleshji. Yeah.
Second, one thing is that section 14A now, the exempt income, they have said that the disallowance has to be made irrespective of the fact that there is exempt income or not. But there are other decisions also that High Court decisions that the disallowance cannot exceed the exempt income. So whether that case would also be covered. And then Maxop and maybe I think SR Gujarat, the Supreme Court has said that the disallowance of expenses worked out by the SSC, if AO wants to reject that, it has to record the satisfaction. So in those cases, what will happen? So it is not necessarily that what the AO should jump to Rule 8D. It should not happen that the AO should jump to Rule 8D and make the disallowance. It has to be under section 14A2 requirement has to be satisfied.
Perfect. Mukesh bhai, want to quickly weigh in here?
No, by mistake, my hand went up. Please proceed.
Sorry. No, but maybe I can put a question. Renu, why do some of these provisions like reassessments, 14A, why do they acquire a life of their own when it comes to litigation? It looks like such a simply drafted provision, and then these litigations go on for 20 years. 14A and reassessments have been two of the, I think, two shining examples of this.
Yeah. No, I think it's also got to do a lot with the interpretation. So it's what the taxpayer interprets versus what the assessee interprets versus what the taxmen, the field officers interpret. And finally, it has to go through its life till it goes to the High Court or Supreme Court to get the clarity, which is unfortunate.
Okay. Kamlesh, you want to weigh in quickly, and then I'll go to section 37.
Arun, just one point, taking a cue from what Renu said. You see, it is left to interpretation. And the fact that some overzealous assessing officers made huge disallowances under 14A, much in excess of the income earned. And that led to the courts, putting a judicial restraint and inventing this balancing act of saying that if there is no exempt income, there can be no disallowance. So if you look at a sample of cases, the disallowance far exceeded the income that was earned, and even the expense that may have been debited to the profit and loss account.
Got it. Here some comments. Rule 8 should be deleted. Places a convenient straitjacket in the hands of the AO. Bombay High Court in Reliance Sports has held that disallowance cannot exceed exempt income. Will this amendment overrule this decision? Okay, these were his comments. Kamleji, for you to weigh in.
Yeah, see, this is from 1/4/2022. So my personal view is always that for any, we'll see how the court interprets this. I agree with Ajayji that it should be left to the court. And I fully agree that for past years, it should be left to the court how they want to interpret this amendment. And because, there are situations when, only few situations you can do retrospective amendment that I explained earlier from Jaitleyji's statement. So this is certainly not retrospective in that sense. But whether this explanation, the way it is worded, how it will affect past cases, that is, of course, for the courts to decide. And on that Reliance Port case, will it affect that Reliance Port case? At least in future, because for past years, I have said that let court to decide. But in future, yes, it should, because let us, give an example that I have incurred an expense of 5 lakh rupees and I have earned an income of 10 lakh, exempt income of 10 lakh rupees. then this 5 lakh is not allowed as deduction. And if I have not earned any income, zero income, then also this 5 lakh is not allowed as deduction. And if I have earned 1 lakh income, then only 1 lakh allowed as deduction. That's a clearly anomaly. You can't have this situation. This way of interpreting the law. Once the law says that irrespective of whether you have earned income or not, expense is to be disallowed, then it does not matter whether you have earned 1 lakh of income or 5 lakh of income. So that is I think in my opinion, it should be beyond any reasonable doubt. So that is that is how I feel about this provision.
I have one question to Kamlesh ji.
Ramesh ji, we are shooting off. Ramesh ji, not now.
It should not happen to reassessment. This should not lead to reassessment.
We need to move to the next provision, Section 37 and Section 40. Renu and Ramesh ji, I'll request you all to take this up. Section 37, I think this is about making, the disallowance with regarding to illegal payments whether made in India overseas. Renu, you want to weigh in quickly, and then I'll go to Ramesh ji.
Yeah, sure. So I think while the provision makes a lot of sense, I think sometimes, for example, in the US jurisdiction, when you do a settlement, for example, for a court case, it's not really penal in nature. So while earlier we could dispute that and say that was a deductible expenses, I think now with this amendment in Section 37, it's very clear that even such kind of settlements which have some kind of a what do I say? It's not tax or penalty, but some. So,
for example, so let's give an example. The visa cases, so many class action suits that come in the US and all. You're referring to those payments, right?
Absolutely. So I think with this particular amendment, it's very clear that whether you have a penalty, whether it's in India or overseas, even like you said, in these class action suits, they would be disqualified or non-deductible.
Very important. Ramesh ji, you want to come in on Section 40? Section 48(3), the cess and surcharge part.
The cess and surcharge has been allowed. I think the decisions, as Kamlesh ji rightly said, the Gujarat High Court, the Rajasthan High Court started the litigation, this pendora of litigations, then Bombay High Court followed Gujarat High Court, and then there so many decisions came. And then one in Kanodia's case, Kolkata Tribunal, following the Supreme Court decision, decided against the SSC that says education cess and surcharge are part of tax. Now, if you read the Section 156, if you read Section 156, 115J AA, 115J A, for carry forward of bad credit, etc., then certainly there are decisions which say that education cess and surcharge is part of tax. And if you see Section 4 read with Section 2 of the Finance Act, then Finance Act Section 2, 11 and 11, 12, 13, they all say surcharge and tax cess is part of tax. So this 83 ITR, the Supreme Court has said that surcharge is nothing but it's a part of tax. So that is the decision now. This has been this has been brought with retrospective effect. So I don't think it will affect the assessees too much, but it will protect the revenue's interest.
Yeah.
Arun, if I may add something quickly over here. So I understand. Yeah, I understand Mr. Vashni's point on this. People who have been claiming this. I think the only concern I have here, this is given that this is a retrospective amendment, it will obviously impact assessees who have been relying on this various court decisions, or where the matters are pending before various.
Did you, Renu? Did you?
I won't disclose that, but my point is very clear. I mean, that means, given the fact that one would have to probably do a rectification under 154, or there would be a reopening under 147, or maybe, a revisionary proceeding under 263. So we're actually increasing the reopening and reassessment that we've been talking about.
Quite.
See, based on this.
Yeah, Ramesh ji, we'll go to the next one. Ramesh ji, we'll go to the next one. Important because we're running short of time. I have to keep time. Next one is benefits given to startups and manufacturing units. Do you want to take this up?
Yeah.
One of the questions is, does it our service-based units. You're happy that it's been, and nowadays so many companies are being even incubated by big industries, big industry groups. I'm sure many of them do claim startup benefits.
Yeah.
You want to just
No, but-
quickly go through the provision?
Yeah, definitely. So Arun, on this is quite close to my heart, because I think this, while this 115 BAB, it was introduced by the ordinance, for the new companies, manufacturing companies set up. And this includes the startups also, that they have extended from 31st of March 23 to 31st of March 24 in view of the pandemic. I think no such provision or benefit has been given to the services sector. Okay. And more so when we know that the existing tax holiday under Section 10AA, that has also expired on 31st March 2020. So this actually makes the Indian services sector highly uncompetitive in the international environment. And as we all know, the service sector has a very prominent role in the Indian economy. It has a strong multiplier effect on the outcome and the employment. So I think this was a big disappointment. We were hoping that this budget would definitely, boost and focus a little more on the services sector. So, given the government has reduced the manufacturing corporate rate to 15%, the fact that the SEZ has also sunset, I think at least for new services companies in the SEZs, if the government could have considered a similar concessional rate of 15%, then we would have one composite rate in the SEZ for both manufacturing and services, And this concessional rate combined with other criteria like employment, investments, I think over a period of time, this was driven for the growth. I think another recommendation was, that the budget could have done something to drive innovation and growth by setting up innovation clusters. While you talk about startups, they could also be innovation clusters where design to manufacture capabilities of engineering and IT companies could have been demonstrated. So something like, you walk in with an idea, you walk out with a prototype. And I think such clusters, they do exist globally. And this would have been a great opportunity for India to showcase its capabilities. And I think what Ramesh had said in the beginning, things like R&D expenses, which were also there earlier, encouraging R&D, innovation, the erstwhile Section 35(2)(ab), I think that should have been continued or reinstated, because supporting the services sector, I think also supports the government's motto of Make in India and Digital India. So while, you encourage startups, you encourage manufacturing companies, I think something on the services sector is still lacking.
Yeah, we go to 194R, and I'll get Kamlesh ji to weigh in on quite a few of the points so that we can cover more ground. 194R, any comment here? I'll just quickly go through what's been proposed. 45 seconds. Finance Bill 22 proposes to insert Section 194R to provide that the person responsible for providing to a resident any benefit or perquisite, whether convertible into money or not, arising from carrying out of a business, exercising of a profession by such residential before providing such benefit or perquisite, as the case may be, to such resident, ensure that tax has been deducted in respect of such benefit or perquisite at the rate of 10% of the value or aggregate of value of such benefit or perquisite. Quite an interesting one. Anyone wants to weigh in here quickly? And then we'll go to Kamlesh ji. It's an interesting one.
I think this was very close to Ramesh ji's heart. He was mentioning this in detail yesterday. I think he should come in.
Ramesh ji, you're on mute.
See, this section has been brought into the act because mainly the gifts or freebies which were given were going untaxed. But how do we compute? The second thing, it talks with 280.14. 280.14, there has been a lot of decisions, even Supreme Court decision 401 ITR, Mahindra's case, that anything in cash is not a perquisite. Now this section 194 talks partly in cash or in kind, that also. So it is not aligned with 28.4. Second thing is how the perquisite value would be calculated. Because if you are sending 10% or you are giving a host of gifts, so how do you calculate to a bunch of...
Yeah, this one has come quite repetitive. This comment has come. In fact, I've even received some messages. saying that valuation could be quite tricky in these cases. So, yeah.
And third is now decisions which have been rendered in the context of 2814 could come in handy for the taxpayers for interpreting what is perquisite or what is not perquisite, or benefit or what is not. So there are certain various decisions starting from Bombay High Court, Supreme Court, Mumbai Tribunal, other tribunals, which I have referred in my article also. So
yeah, this comes from one of the tax heads of one of the large global MNCs. It says Indian tax head. We need a clarification on 194R, and has to be made very restrictive. Otherwise, it will create a lot of issues for the industry. Also, it is difficult to implement in digital era in large companies. It needs to be relooked.
I had one point. Now, any incentives or quantity discount or value scheme, upfront discount, cashback scheme, finance scheme, display playout, etc. Those, whether if they are provided in cash or as credit note, they do not fall under 2814. So now those kind of clarification, if this comes under 194R, because it's very onerous. So one is the computation, how the values perquisite, whether it should be calculated in accordance with Rule 3, or how it has to be calculated. Second thing, what should be covered, what should not be covered.
Sure, got it. Keshbhai, before Kamleshji responds, you want to make some quick points? A lot of ground has been covered in the last 10 minutes.
No, so I largely echo Ramesh's sentiments that this is onerous and it's going to really cause hair-splitting exercise for the person responsible. I'm not questioning the intent. This income should be taxed, but I'm questioning how now you're putting responsibility on the employer or the company to deduct tax. Let's look at the first proviso. It says that where in a situation it's partly cash and partly in kind, and the cash is not sufficient to meet the withholding tax liability, then before releasing the payment or the benefit, ensure that tax has been paid. Now, this is even more difficult. So what you're doing now, you're making the employer, or not the employer, the company that is providing this benefit or perquisite, to now ensure that tax is deducted. Tax is deducted rather by the taxes paid rather by the payee of the income. I think this is clearly going a bit too far, and certainly, in my view, multiplies. Now, what if the payee or the beneficiary of the income wants to take a view that this is exempt? But here, there is no flexibility left now. So you are thrusting the withholding tax obligation on the person providing the benefit, but you're making it really onerous now by telling him, please make sure that if the cash that you're paying is not sufficient, at least the person who's the beneficiary pays the taxes. That's the onerous part of it.
Kamleshji, now we are playing T20.
Yeah. See,
Kamleshji is our MS Dhoni.
Yeah. See. First of all, MS Dhoni is retired. Yeah, छोड़ो यार. MS Dhoni बना गए हो.
Virat Kohli.
I still have few years to retire. Let me bat for those few years.
Virat Kohli.
Okay. So see. First of all, let us try to understand that this 194R is facilitating 28.4. 28.4 says that any benefit or perquisite given in the course of a business or profession is a taxable income in the hand of the person who is receiving it. But there is no TDS provision for that. So this TDS provision is exactly for that situation, because otherwise there is not even reporting for such benefit or perquisites. And we have seen in many cases. In one case, we actually saw 130 crore of perquisites were given to many people by the business house, and those people did not disclose that as income. So this is what we detected. So we can imagine how much must be without our knowledge. So can we have a taxation, TDS, which is 10% taxation, so that and that person those can be brought into tax net. So these benefit of perquisite, because they are in kind. So they get unreported also. The person who is receiving it also thinks that, it is not something which is taxable. I have got a free ticket to go to Switzerland, and I feel ki so what, the business house has given me because I am a good dealer. I go to Switzerland and go and visit and come back. But it should be known to him that it is taxable under 28(4). And it will known to him only when this business house deduct TDS on that. So let us try to understand the principle behind it. Now coming to the question whether, that cash component which is written, see, because 28(4) says whether converted into money or not. So that means there could be a conversion into money, and therefore that money part is written there. If it is only in kind, then you can ignore that money part and you can apply that kind. So it doesn't mean that, that why that cash part is written there. Yeah. There could be a situation where benefit or perquisite can be converted into money. So that is why it is written. And then that question that what happens, it is onerous because, I have to pay it, release it before, I have to pay the tax before I release that benefit or perquisite. That is already there in 194B. That is how payment in kind is taxed. TDS on payment in kind. This is a fundamental principle that you don't have to wait for 7th of the next month to pay TDS. There is a responsibility on you. There's a responsibility on you that you first pay the TDS and then you release the benefit. That is already there in 194B, and it has been there for many, many years. So there is nothing new, And yes, lastly, I agree that there could be some difficulties that whether cash discount or these kind of items, whether that is a benefit or perquisite or not. So that power to remove difficulty has been taken in this section because we anticipated that there are going to be some clarification which are required to be issued. Like we have issued clarification for 194O, we have issued clarification for TDS on sale of goods or TCS on sale of goods. So we have issued clarification because we anticipated that there would be some clarification needed to clarify, and therefore power were taken under those sections as well, and we have taken power under this section also, so that we can issue that clarification so that genuine payments are not covered. So so that is not the intention that everything should get covered.
Fine, perfect. Ramesh, there are so many questions one can ask. But right now, there's a paucity of time. So and I need your comments on a couple of other provisions as well. Unless you on the cess or surcharge part, you want to weigh in on some of the other part, either cess or surcharge or.
No, I have already said about cess and surcharge. My justification I have given that this is one item which was justified even under Jaitley ji comments. It was fully justified, and this government is justified in proposing to the legislature that this should get retrospective. On the 37, I must compliment Pramod Kumar sir. I mean, because in the explanatory memorandum I have borrowed. I have quoted, in fact, taken a lot from his judgment, and very good judgment he had given. And if people are saying that explanatory memorandum is very good, some credit should also go to him because some of the part we have taken from his judgment and put it there, which makes it look so good. So I don't know whether he's there or not, but you do pass on my compliment to him.
I will be an extremely erudite tribunal judge and 37 landmark judgments.
37 one explanation Pramod Kumarji decision that has been referred to a special bench, that is McLeod's case. Now the Supreme Court is also seized with this matter, Apex Laboratories.
Yeah,
and that seize means the order is reserved. So there was no necessity, because then again it will open Pandora's box. The argument would be that this was the intention of the government, because the earlier this provision was not there. So the disallowance should not happen, it should be allowed. So the government should have waited for the Supreme Court decision, let the Supreme Court decide, and then
as Mukesh bhai said, Supreme Court decisions can take
No. I think this is a wrong practice. That we should wait for Supreme Court decision to give clarity. Taxpayers should get that clarity at the earliest point of time. And that is why, please give me time, because a lot of Ajay ji referred to 201 and a lot of people are also writing 201, that what is the background of 201 amendment. So this is what is the background. अभी वो चिंगारी है, आग बन सकती थी, हमने पहले ही उसको रोक दिया है. तो एक जजमेंट आया है, शायद अजय जी को नहीं पता था, नहीं तो अभी तक एडिशनल ग्राउंड काफी जगह ले लिए होते। तो उस जजमेंट ने क्या कहा, बड़ा इंटरेस्टिंग है, आप इसको देखिए। सेक्शन 2011A कहता है कि ये इंटरेस्ट लगेगा आपको इफ यू हैव डिफॉल्टेड ऑन TDS. Similar provision is there in 206C that if you have defaulted in TDS, whether you have deducted not paid or whether you have not deducted that 1% or 1.5%, whatever interest is there, that will be levied and it must be paid before filing statement. That is written there. It must be paid before filing statement. And then courts have held that if you have, not filed the statement, then you don't have to pay. So that means if it is a continuing default, then you can't pay. There is one judgment. So assessing officer passed 201 order, assessing in default, कि आज तक का मैंने इंटरेस्ट लगा दिया, ये तुम्हारा 2011A का इंटरेस्ट है। असेसी कहता है कि मैंने तो अभी तक पे ही नहीं किया, मेरा तो कंटिन्यूअस डिफॉल्ट है, 201 लग ही नहीं सकता है। And ITT said yes. So this is the background for that 201.
Perfect. We'll go to the next one. Transfer pricing.
I think the provision is not happily worded. If this is your intent, it is not happily worded at all. It seems to suggest that whatever determination is done by the EO is sacrosanct and binding.
No, that is not the intention.
No, this is what is coming out from the language.
Okay, we will examine that, but I have told you the intention.
Right, okay. But this is not coming out from the plain language of the section.
Okay, Mukesh bhai, can we go to section 263? It covers transfer pricing. Mukesh bhai, we have 9 minutes to go.
Sure.
Section 263, which gives powers to the CCIT, PCIT to invoke provisions of 263 in cases of transfer pricing. You want to... Does it have an impact?
There were earlier...
Mukesh bhai, and then I'll come to Ramesh ji. Mukesh bhai, yeah.
No, please let Ramesh ji go ahead.
See, earlier, actually, I think this 263 has, they have made the amendment only to override the Mumbai Tribunal decisions in JCB, India, SR, Steel and Tata Communications, where they have said that Mumbai Tribunal has held that the TPO order cannot be revised under 263. The logic behind was that the TPO passes the order with the approval of the CIT. So that was, I think that was the reason why the tribunals, so far there are tribunal decisions, took the view that since the TPO has passed the order after taking the approval from the CIT TP, then it should not be subject to 263. Now, so now it is again, we are supposing some assessing officer takes one view, TPO takes one view, and then the CIT passes 263. Again, it will open litigations, whether it is erroneous and prejudicial, those kind of things will come again. So the matter has to be litigated. Because in TP, you think mostly is this benchmark exercise. If the CIT says, no, I do not agree, that arm's length margin should be 5% or 10%, according to me, it should be 10%. So why it should not be, I would revise this. So
Mukesh, you want to add to this quickly?
I have a very fundamental disagreement with 263 being in the statute in the first place. 263 is a source of dissonance for taxpayers. My question is that in an era of faceless assessment, in an era of real-time availability of information, do you need 263? I think that needs to be philosophically debated in mind. Second, let's come to the question of now 263 being amended to give a power to revise the transfer pricing assessment. The question we should be asking ourselves is that if a transfer pricing officer under the statute has been bestowed with the responsibility only to undertake a transfer pricing assessment, he's supposed to be an expert. How can now a commissioner under 263 come to a conclusion that it is prejudicial to the revenue? Then in that case, the transfer pricing officer who's supposed to be an expert has been delinquent in his responsibility to conduct the assessment in the first place. There is a proper procedure laid down in the law. There is a proper empowerment with the transfer pricing officer. Now, why do you want to give another handle to a higher authority to reopen on the ground that it is erroneous? I know, again, 263 is as lethal as the reopening proceedings. I think if we have relooked at 147 and 148, I would urge and request Mr. Varshney to please look at 263. But you have gone in the reverse direction now by expanding the scope of 263 by saying that I'm going to revise the transfer pricing officer.
Renu, you want to weigh in? Ajay wants to have a word. Renu, quickly, and then Ajay.
No, I completely agree with what Mukesh just said. Completely endorse his views.
Yeah.
I think, to me, Arun, the larger issue is basically that a TPO's order goes to the DRP, and then a final assessment order is passed, which is subject of revision under Section 263. Now, the question is that the DRP is composed of 3 commissioners. Now, whether a commissioner of coordinate rank can sit in judgment over the decision or the final assessment order, which incorporates the TPO's order, whether in that situation it can be said that that single commissioner, the jurisdictional commissioner, is exercising discretion or satisfaction or giving approval or rejecting approval with respect to what the DRP has decided. So it is not really the TPO's order that the commissioner is revising. He is sitting in judgment over the final assessment, which incorporates the decision of the DRP, which is composed of 3 commissioners.
Perfect. We have 3 minutes to go here. I think we've had a riveting panel. We've also been able to take a lot of questions and comments. I think the part which has evoked the most animated response from the audience has been 2 sections. One, virtual digital assets, no surprise. The second one is 194R. I was just looking at the number of questions. We'll need an hour or 2 to deal with them. So I think I would request IFA to conduct another panel only on 194R for Mukesh Bhai's suggestion, but a lot of questions on 194R here, I can see. So it has a lot of real world impact for a lot of people or at least on this forum. Kamleshji, the final word, we start with you.
So final word, as you said, 194R. So something, I want to say on 194R, and that is in a lighter vein, not to be taken seriously. And that is a lot of questions. So whether Diwali gifts 194R is attracted. So it is attracted, but then there is also a limit of 20,000, in 194R. So if you are giving a Diwali gift of more than 20,000 to any person, give it to me, because then it will not be taxable, because I am not carrying out business or profession.
Perfect.
Arun, can I make one point?
Rameshji, we have closing comment.
Everyone has 20 seconds.
Because it is very pertinent. It is very pertinent because if
we have 15 seconds, sir. 15 seconds.
Okay, if I supposing before taking the tour, I deposit the TDS and then the tour is cancelled because of some reasons, force majeure. Now, what the TDS has been deducted, how do I get the refund?
I think that is already there. You can file revised statement and get it. People are doing it.
Fine, perfect.
Other provisions. So there is no problem with that. And once again, what I said, give a gift to me, I said in a lighter vein, don't, report it somewhere.
Mukesh bhai, you won't be able to gift iPads to your employees now for Diwali. So 20,000.
No, they are employees. They are employees. It does not apply to them.
Right. So you can't gift me an iPad, Mukesh bhai.
I wanted a quick reaction of Mr. Varshney for the points that Ajay and I raised on revisionary powers under 263.
Okay. And then we'll close for sure.
See, revisionary power, it should be there. See, you have a valid point that why should the assessing officer make a mistake? Why should transfer pricing officer make a mistake? But that is how the law is, that everybody is a human being, can make a mistake. And in my view, 263 is there, should be used sparingly. And that opportunity would be less now with the faceless assessment, because that order is being reviewed. Although TPO order is not reviewed because TPO is not under faceless assessment. So this is just providing clarity on the taxation, on TPO's order, that who should review it. there are some questions here that already CIT is giving approval to TPO order. So are you doing 263 of your own approval? So let me clarify. First of all, not all orders are approved by CIT. Some orders are approved at a range level as well. So those orders can be reviewed by CIT. And if there is an order which has been approved by CIT, then CC should use 263. That CIT should not use. And for that, I think administrative instruction should be passed by CBDT, because that should be ensured. I mean, that is a perfect valid point, that if I have given an approval to an order, then if there is anything wrong, my senior should review it.
Closing comments. Let's start with Renu. Exactly 20 seconds, Renu. Which is the provision that will keep you busy for the next 12 months as the global tax rate of TCS? Quick.
I think the one on reassessment, undoubtedly, and the 194R. But just one comment I would like to make to Mr. Vashni is, can we see more of focus on services sector also?
Cool. Done. Next, Ramesh ji, 15 seconds.
I agree with Renu's view. I would be spending most of the time on now TDS. Now there is one more 194R, and then I think reassessment proceedings and 263 proceedings will increase multifold.
Perfect. Mukesh bhai, and let Ajay ji, and then Mukesh bhai, of course. Mukesh bhai is the host. Ajay ji.
Arun, I'm not going to hang my tail on just one provision.
Okay.
So that will be the end of the practice. So I'm hoping all the provisions come into effect, and all of them have potential or scope for litigation. So
Maximum. Which one is the maximum?
I think all of them will be tested in the courts. 14A, Section 37, 194R. And my only suggestion will be for Kamlesh ji that progressively they should issue clarifications in order to cut down on unproductive litigation and unproductive disputes. I think, as he said, that they have reserved the power to issue clarifications, to issue exclusions. I think the government would do well to come out with these administrative circulars.
Yeah, no. See, we are a closed circle. No one wants no one wants, that our business should get affected, including tax ultras. So we request the government to keep coming up with amendments. I was joking. Even I can joke. Ajay ji, but always riveting to hear from you. Mukesh bhai, the final word. Before that, Vijay Goela, great friend, we are missing him today. He says, thanks Kamlesh ji for pointing out that 194R is not applicable for employee gifts. Mukesh bhai, the final word goes to you as always.
No, I think all the provisions are interesting. It will keep up a very healthy debate. One provision that we didn't discuss, which when we were offline entering, that I would take offline again with Mr. Vashne, is the new explanation to Section 68, because I think it could be a downer for startups who rely on non-equity forms of funding. The source on source rules, which I thought was a debate set by the court, has again resurfaced after the new explanation. But I just thought I'll take this opportunity to express my personal gratitude, and on behalf of IFA as well, before people do the formal vote of thanks. Mr. Vashne has been absolutely rock star, facing seam, spin, all forms of balls being bowled at him. So thank you very much, sir.
Yeah, Kamlesh ji always sets the themes on fire. In fact, one of the senior most IRS officers, Mr. Bansal, says, thanks Kamlesh, Ajay ji, Mukesh ji and other panelists. Wonderful discussion. We enjoyed it. I hope we really enjoyed it. I hope you all enjoyed it as much as we did. It's always a pleasure to moderate this panel. Whenever we think, I think of hanging up my boots for this moderation. 10 years I've done it, and then every time this panel invite comes, I just can't say no. It's an absolute pleasure. It's one of the most, it's one panel that I look forward to every year, as long as I get an invite from Mukesh bhai. So it's my pleasure to have hosted this panel. Kamlesh ji, Ramesh ji, Renu, Ajay ji and Mukesh bhai, grateful for your time, and we will be back next year for this same panel, as is the tradition. And there are quite a few pointers from this panel discussion, which maybe lend ourselves to a few sessions going forward in the next few months. I hand it back to Ishita.
Thank you, panelists. It was an amazing panel. And of course, this panel would lead to more discussions at IFA. Now, I will call upon Mr. Vijay Iyer, the Vice Chairman of IFA NRC, to give it the vote of thanks.
Hi, this is a privilege and an honor to do a vote of thanks for this. I think Arun has done the conclusion very well. Mukesh also summed up all the session, all the discussion appropriately. I think it's a great honor to have sat through this session and to have learned so much. I think this also kind of, it implies that there is a lot of aptitude and a lot of appetite for this kind of discussion. We have had more than 500 people attending this session. And I think that kind of speaks volumes for the speakers that we've had today. Esteemed speakers, Mr. Vashni, of course, always up to speed with everything that is going around. Ajay and Mukesh giving the consultant perspective, and then Renu and Ramesh ji providing us the taxpayer perspective. So it's an excellent session, and thank you everyone for joining in. And this kind of prompts us to have many more such knowledge sharing sessions, so that this can be something which is more repetitive and more useful for the audience. Thank you, everyone.
Thank you. And we should thank Ishita, Shelly, Shashwat, and all other people who have organized this. Thank you very much.
Thank you.
Thank you, sir. Thanks a lot.
Thank you.
Thank you,
Thanks,
everyone.
Arun.
Thank you, sir.
Bye.
Thank you.